Very good evening to all of you. This webinar is being conducted on the topic that is Introduction and Application of Technical Analysis in Stock Market Investing as well as Trading in Equity Markets, which is being organized by the Committee on Financial Market and Investors Protection ICAI. I, Tanushree Lekha, Chartered Accountant, would like to conduct this webinar on this topic. And first of all, I would like to extend our thankfulness for the committee for holding such sessions to all the new members and for all the professionals. Today, the market is having a wealth creation in its own way. And there is the magic of compounding that gets involved with the trading in equity market. We, as chartered accountants, should become the chart analyst. That is the journey from CA to avail the benefit of wealth creation for all. And I believe that the stock market has a lot of ups and downs which can be predicted or which can be understood by all and can be utilized in a better way if we understand the technical analysis as well as fundamental analysis. Ladies and gentlemen, this committee is having the chairman, sir, that is CS Nanda sir, Charanjot Singh Nanda sir, and Charanjot Singh Nanda sir, we should like to introduce him, the man who is having the personality, the man who is having the motivational speaker. He is no one less than the tendency to create the magic around him. Ladies and gentlemen, please welcome Nanda sir for conducting this webinar and addressing all of us.
Thanks a lot for your kind words, Tanu Lekha from Patna.
Thank you so much.
Ladies and gentlemen, we have CA Prakash Padalia, who's from Mumbai, Samandip Wadhwa from ICAI committee, Ayaz from the technical support, Giverji from the committee, and all participants have come here to go home more enlightened. Ladies and gentlemen, I welcome you to yet another very exciting session of the Committee for Financial Markets and Investor Protection. Let me tell you one thing very candidly, very forthcomingly. The entire world looks upon us as leaders in capital markets. The stringent norms we have in this market, the settlement procedures we have, we are the best in this world. I happen to be a part of the SEBI's committee on ease of doing business and LODR, and I see how meticulously they work, how much involved they are, and more importantly, their objective is to ensure that people make money, people create value and worth, and at the same time, they understand the risk aspect of investing. I am very keen to tell you that your committee works decent time to ensure that we bring best of the speakers. See, Prakash Padalia is a young chartered accountant who met me in BKC office. He is a man who understands technical analysis. We need to understand what are fundamental analysis and what are technical analysis. And your committee holds a course which we call in short form as FATA, Financial Analysis and Technical Analysis. And we are now representing to SEBI to ensure that a person who has qualified as FATA course gets the privilege to work as a research analyst without getting any certifications from SEBI. The markets today are at all-time high. But if you look at the 3 days market, once the market goes 400 points up, goes down again, went 200 points up, went down 420 points down. Next day it opened 50 points down, went up to 230, 40 points. Again, next day it opened 100 points up and then tailspin to 140 points. These wild variations in market drive investors out. Undoubtedly, the market is being driven by the money of young investors who are now taking SIPs in huge quantity. But these type of variances, these types of rise in risk is something that is alarming. And for that, we have brought Prakash Padalia, who will tell you the area where you have to enter and the areas where you have to get out. I am pleased to tell you that the Council of the Institute of Chartered Accountants of India has allowed practicing chartered accountants to deal in future and options segments, particularly for currency and stock markets. But largely, ladies and gentlemen, we need to be attuned to the system, to create value, to understand risk, to adhere to stop losses and have targets, to book profits and go home. Something that drives the market crazy is confusion. And I'm reminded of a couplet which says, तमाम के तमाम शहर बसाकर सुकून के लिए गांव ढूंढते हैं. तमाम के तमाम शहर बसाकर सुकून के लिए गांव ढूंढते हैं. कितने नादान हैं हम, हाथ में कुल्हाड़ी लेकर छांव ढूंढते हैं. Yes, it is your birthright to make money, but don't lose your capital. Create value, worth, particularly for yourself and your clients. Tell them how, in lesser risk, they can heap huger benefits. Understand your levels, understand the markets, understand stop losses, and going forth, do whatever pleases you in creating value and worth. I won't stand between you and Mr. Prakash Padalia. So over to Tanulekha. Tanulekha, the dais is all yours now. You could proceed and take things forward. Thank you.
So much, sir. Thank you so much for your words of wisdom. Your words of wisdom always enlighten us, all of us, and it serves a motivation to understand the market from your side. The words that we carry from your lessons, that is the fear, greed, and understanding the market psychology to make the money out of it. Thank you so much, sir.
Welcome, most welcome, Tanulekha. I'll have to withdraw because I'm in a meeting, but I thought I should address at least for a brief period.
Definitely.
Best of luck to the webinar. Best of luck, Padalia Sahab. Treat and take things to newer heights. I look at the video when it comes to me. I'll watch the entire program. Thank you. Have a nice evening. Bye bye.
Bye
Thank you,
bye.
sir.
Bye to all. Bye bye.
Conducting the session again, I would like to welcome CA Prakash Padalia, sir. He is practicing chartered accountant in Mumbai. He is also pursuing third level of CMT. Prakash Padalia, sir, would be enlightening us on the first topic, that is the introduction and application of technical analysis in stock market. Friends, we believe that in order to avail the opportunity of making the profit in the market, we must understand both the analysis, that is fundamental analysis as well as the technical analysis. Members, as we all know, that chartered accountants are well equipped to understand the fundamental analysis, but it's time to understand and it's time to make friends with the trends to accrue the profit out of the markets, and that can happen only based on the technical analysis. To enlighten us and to share his valuable insights and knowledge, I welcome CA Prakash Padalia, sir, to share his PPT and his knowledge based on the topic.
Yeah. Thank you so much, Lekha ji. I'll be sharing my PPT right across.
Thank you so much, sir.
Yeah, so thank you so much, Nanda sir and Lekha ji, for the wonderful introduction. Since we are taking a session for ICAI, I have curve fitted my PPT accordingly so that CAs can relate to our session. So the basic agenda for today is that to make technical analysis more famous among chartered accountants. And how will I do that? First, I'll be introducing what is technicals. Then I'll be teaching you that how is technicals important and why it is necessary. And at the end, I'll be showing some application of technical analysis in the world of investing. Because I believe that trading is a very, very niche job, and like only 89%, only 11% of the traders make money. Rather, 89% did make loss in F&O and trading. So it's a highly professional job. So today's session is going to be more in the point of view of investment, because we all are working in some domains of the CA world. Some are practicing, some are into the industry, and hence I think there are more investors than traders attending the session right now. So let me give you an introduction of what is exactly technical analysis in stock market. So some myths about stock market that I would like to clear, that people say that trading is gambling. In Hindi, we say satta. So trading is not satta. It is like a business, just like any other business where we buy something, we sell something, and there's a calculated risk and reward attached to it. It is not a lottery scheme being organized by the state government that everyone buys ticket and one of them wins the entire amount. It is not that. Yes, the percentage of profitable traders is less. It is around 10, 11 percentage, but the 89 percentage people who are making loss, half of them are trading business like gambling. So it is not gambling. It is actually a very good business. If you diversify your risk and reward, it can be a good income generating tool. Second is that the second myth about market is that it is all about fundamentals. We have heard only fundamental stories about stock market saying that if you had bought TCS in 2010, the amount would have been 5x till now. But why only highlight TCS? Why can't we highlight a Yes Bank or a Suzlon, which have destroyed wealth across the years? So market is not only about fundamentals. Of course, fundamentals play a very important role, but to earn the alpha, if you're earning 12 percentage, technicals will get you to 18 percentage. That is the only difference between using technicals plus fundamentals and using fundamentals alone. So if it gives you an extra edge by by using technicals as one of your armor, you should definitely do it. The third is that experts know everything. Whenever a good trader or a good investor meets someone, he goes into a crowd, the crowd will always ask him Nifty kya lagta hai. Now he doesn't know, the guy doesn't know that where will the market go, and he is very well aware of that market में कुछ भी हो सकता है, and he is prepared. His strategy, his tools, his hedging is prepared in a manner that कल जाके market में कुछ भी हो सकता है. So don't ask him that where is the market going, because if he knew where is the market going, he would have been a Rakesh Jhunjhunwala till now. The fact is that he doesn't know where the market will go, and he is very well embracing that fact. So next time we meet someone, please do not ask that where is the market going and what is happening in the market. When will 25,000 come, or when will 15,000 come? Just be, just learn his qualities. Like he's a trader, his mind is equanimous, he has a good mindset, and that is why he's in the market. He is not a predicting tool, but he's a path following tool. That is why we call him a trader. The fourth point is that there is no formal degree for technicals, which is completely wrong. For CA, for finance, we have CFA. For accounting, bookkeeping, auditing, we have chartered accountancy. And similarly, for for technical analysis, we have CFT and CMT. Now, these are very well recognized degrees across the world. CMT is US based, and CFT is nothing but 2 levels of CMT you clear and you get CFT. So these are at par with CFA because they teach macros as well as technicals in the same course. And I have done CMT level 2. I'm in CMT level 3 right now. So I know that what kind of knowledge are they providing. The last one is for the 2020 generation who have entered the market after the COVID crash. They think that market always goes up, which is completely false. For some of them who have seen 2000, 2001, or 2008, or even 2018, 19 mid cap, small cap bear market, they know that market can fall by 60, 65% once in a decade. It happened during COVID. And because it is so recent in our memory, that last 4 years, that we end up thinking that there is a famous saying that market और इंसान दोनों ऊपर ही जाता है. No, it is not like that. You go and see Japan market. Japan market hit a all-time high after 35 years. 1989 was one all-time high. After that, they have given a 35-year breakout in 2023. So it's not like that market will always go up. Even China is of the example. 2008 high is not removed till date. Imagine something happening in Indian market. The whole 2020 generation who are having a notion that market will stay consolidated for some time, it will go down, but eventually it will go up. No, it is not like that. That is a recency bias that is created in our minds that market always goes up. Now, why do people fail in market? People fail in market because it takes only a demat account and a capital to start trading. It doesn't take any experience to start trading, right? I as a CA signed my first balance sheet after 3 years of articleship, after clearing all 3 levels of CA. And then when I took up a COP, I was able to sign my first audited balance sheet after 7, 8 years of giving my CPT. So it took good 7, 8 years before signing my first audited balance sheet. And what do you do for trading? You open a demat account today, and 15 minutes later you take your first trade. So the access is very easy, which is a good thing. The access is easy, but then we have to respect the fact that CAs, doctors, engineers, architects, they take years and years to clear their examination. They first do a job under someone, and then they eventually go and appear for and then they take it up as a profession. But with trading, it is not such. There is no rule that if you are not 18, you cannot trade and all. So this is one area that the new participant should keep in mind, that first trade for 2 3 years, with small capital and then go on to increase their capital. Now, the problem with new traders is that they do not have a well-tested trading plan or risk management. They like a trade, they take it. So it happens like that only. But actual mein, what should be their plan? They should have a perfect strategy. They should have a money management, risk management plan. Like even a big 10-year plan should have small 6 months plan. So all these things need to be looked by new traders. And one very important part is that taking small losses. Because if a small loss is not taken, it will become horrific when it becomes a big loss. Fourth is again unreasonable expectations from market. There are people who are talking about 35-40% returns every year. It has happened in the last 2-3 years, but in a decade, only 2 or 3 years are such where you make 35-40% in a year. Otherwise, the reasonable expectation is around 18 to 20 percentage. That is the FD rate, that is a risk-free rate plus the inflation. That itself comes to 12-13 percentage plus a risk premium because you're giving your much value time to this profession. So 18 to 20 percentage should be good expectation. As famous CA Rakesh Junjunwala said, if he is getting 18 percentage, he's a king. If he's getting 21 percentage, he's the emperor. So when someone like Rakesh Junjunwala sir says something, I think we better follow it. And the last one is excessive leverage can blow off your trading account. I have a small illustration for this. That how does like people, we all have heard stories, right? That someone who was doing FNO, he was having two factories and they had to sell off both the factories because that person was into leverage trading. Now, why does this thing happen? Let's say I have I want 250 shares of Reliance. Now there are three ways of trading. One is a cash market, other is a futures market, and the third is an options market. If I want to buy 250 shares of Reliance and the current market price is rupees 3,000, how much cash will I actually need? I will need an investment of 7,50,000 rupees. But if I want to buy it in futures market, now because futures market has leverage, I'll be able to buy the same number of shares by giving only a margin of 1,25,000 rupees. Whereas if I'm an option buyer, if I'm into buying call options because because I think a script should go up, then how much premium I'm supposed to pay? I'm supposed to pay 25,000 per lot, assuming that the premium is 100 rupees per share. So the investment is over here 750, 125, and 25,000. Now, what if Reliance goes down by 100 rupees? How much money am I going to lose in cash market? 250 shares into 100 rupees. So my loss is 25,000. How much am I going to lose in futures market? It is again one lot of 250 shares. The share has gone down by 100 rupees. So again 25,000. And in options market, if the share goes down by 100, so the option will never get zero until expiry. But for all practical purposes, if Reliance goes down by 100 rupees, I will end up losing my entire investment amount. So here is the ROI. In cash market, I'm losing 3.33 percentage. In futures market, I'm losing 20 percentage of the capital deployed. And in options, I'm losing 100 percentage. So this is the reason why people make huge losses in stock market. And it is very important to have a view that why people lose money, because everyone enters stock market thinking that he has a Midas touch, which is not true. So if you look at the leverage over here, the leverage involved in cash market is only one time. In futures, it is 6 times, whereas in options, it is 30 times. I'll tell you what 30 times leverage means. Imagine a balance sheet with debt to equity ratio of 30. What will you tell your client? That you will have to shut down your business someday. That is the most blatant reply. If equity is 30 and so if debt is 30 and equity is 1, that is the most natural reply which is going to come, that take care of your debt, otherwise your business will be gone. So this is the thing with options trading, and it is very important to understand that futures and options are meant for hedging your portfolio and not for doing speculation on it. So since we know that the reasons that why people make losses in stock market, now let me go uh, to the crux of the topic in explaining that how is the topic actually going to go. So first thing I'm going to explain is understanding why technicals is important. Then we learn a bit of basics of technicals. Then we'll learn the practical application of technicals in investing. And then I'll be teaching you two trading strategies to earn great returns in short term. These are tried and tested because I have been using them since some time now. And the last one, I wouldn't call it advice. It is a I'm going to tell you what I am going to do in 2024, looking at the current macros and market scenario. So we start with the main topic now. There are three ways of making money in stock market. One is fundamentals, which is typically used by very long-term investors. Second is technicals, which is used by short to medium-term traders and identifying the trend and staying with the trend and making money. And the third is insider information. Insider information is illegal, so we better not talk about it. So it is only fundamentals and technicals. So what is basically fundamental analysis? Let us assume that me and my friend, we have gone to a shopping mall, we did our shopping, and then we are going to the cafeteria area. Now I am very hungry, but my friend is not that much hungry. He's okay if he gets the food after half an hour, whereas I want my food right now. So what will I do is that I know that there is great volumes at McDonald's. They are always ready with the product. As soon as I pay whatever 50, 60 rupees, I'll get money, one burger. So I already know that where I want to work. So I'll be going to straight away McDonald's. I'll be taking my delivery and I'll be having my food. Whereas my friend who is not that much hungry, he has a greater gestation time. So what he will do is that he will go across all the restaurants. He'll go across all the restaurants and he will read the menu of all the restaurants and he will see that how is the kitchen, are is the food being prepared in good conditions or not, are the chef is he using the gloves and the mask or not. He will be looking at every aspect of that particular restaurant. He'll be also looking at the pricing. If he likes everything but the pricing is too high, he will completely avoid it because there is no worth of the money that he is paying. So he will go across all the restaurants and then he will decide that where does he want to have his food. So basically what he did was fundamental investing. In fundamental investing, because your gestation period is not too short, you're willing to invest for a greater period of time. Therefore, he will end up seeing everything. He will do all kinds of top down, bottom up approach. He will do the sector analysis. He will look at the quality of the management, also some macro factors such as is there a recession coming forward, is the yield curve inverted or not, what is the USD INR doing, are the like the macro, I mean the geopolitical situation correct or not. So he'll be looking at all these factors and at the end he will be looking at valuation of the business. If this business is available at a cheap valuation, he will go and buy it. Whereas what did I do? I just saw that where the crowd is going. I will look at the momentum, like if there are 10 restaurants and if there is maximum crowd at one of the restaurant, I know that यहाँ पे अच्छा खाना मिलता है. That is why people are going over there. So I, as a technical analyst, will just go there and consume my food. This is the basic layman's term of difference between technicals and fundamentals. Now, what are the pitfalls of fundamental investing for retail investors? Like obviously, if there are two worlds, if there is fundamentals and there is technicals, people are going to technicals because there must be some flaw or some pitfalls of fundamental investing. So let us understand that what can be such pitfalls of fundamental investing for retail investors. One is that lack of data or information. You know, there are n number of sites which provide you all the data, but we are not sure about the accuracy of the data because they are providing the data for free of cost and they aren't really charging anything for it. So that data cannot be trusted. And if you go and buy a trusted data, that itself costs rupees 30 lakhs per annum. So for a retail investor, this is not possible that he gets all the true information regarding a company. But I'm sure a PMS or a family office or mutual fund, they can have these these all software and major expenses to get the right amount of data. Second is no access to management. There are conference calls, but then in conference call you get to talk for only 2-3 minutes. Every question is addressed for only 2-3 minutes, whereas for a mutual fund or a big institution, they can set up a meeting with the management and ask them about the future plans. The third is that there is lack of expertise in a particular industry. If you are an engineer and you have worked in an IT company, then probably you know everything about only the IT industry. You wouldn't know what is happening in the auto sector. Whereas in a mutual fund, there are 10 teams and each team is having 5 CAs or CFAs. And that one team, uska kaam hi hai auto sector. This guy's work is IT sector. This guy's work is finance. So there are 5 dedicated people who are just day in and day out. They are studying just one sector from 10 years. Can we beat the knowledge? in terms of fundamentals and the experience, we can never beat them. And the fourth thing is that valuation is a very tricky concept. Like HDFC Bank, if you look at 2018, it was trading at 6 times price to book value. Today, it is trading at pre-merger, it was trading at 3x price to book value. Now, has HDFC Bank did anything wrong in these years? No. Corporate governance issue has never happened. The ROA is fantastic. The deposit hasn't come down really. It was only because of the merger that the CASA ratio must have come down. But fundamentally, if you see, today's HDFC Bank is much stronger than 2018's HDFC Bank. So why this difference in valuation? Earlier it was 6x, and today in 2023 it is 2.4x. Whereas if you look at PSU banks, nothing great has happened in PSU banks in the last 3-4 years. But earlier those PSU banks were trading at 0.25 times price to book value. Today they have just crossed 1 time price to book value. So all these valuation is a very tricky concept because in market everything is cyclical. From 2010 to 2020, private banks were beating the public banks hands down, but since last 4 years it is exactly the opposite. And if you look at the fundamental changes that have happened, there is no real eye catching fundamental change that has happened. So it is all cyclical and there might be no reason behind it. Like this is the nature of the market, that it will do things which are the least expected. And if someone has bought HDFC at 6x, he's still sitting at the same number. The price is around 1450, 1500. Since 2020, it is at the same number, but the price to book value has come down from 6 to 3. Probably HDFC Bank was, enjoying the premium for being such a great bank like across 20-25 years. But now that premium has gone, there's like reason best known to the market. Even like no one can pinpoint at the reason because it is only hindsight that we're talking. Fourth is that even without any change in fundamentals, price can move by 100 to 100%. In a bull market such as this one, from April 22 to till now, many stocks have gone up by 2-3 times, but then there are no change in fundamentals. If you look at the corporate actions or results, you wouldn't find anything. The performance has been the same, but those stocks have gone up by 100 to 100%. Now, this is because of some other factors than fundamentals. It may be market is driven by liquidity or something like that, but there is no particular reason for something to perform like that. Okay, so technicals lead fundamentals most of the time because price often moves before the actual reason is out publicly. Say, for example, like something will go up by 50% and then it will deliver good results. So we are going to see some examples of this where this point will come out very clear. So let us discuss that what makes the price move. Like everything under earth that makes the price move is covered under these 5 things. One can be news or result, performance of the company. Second can be improving fundamentals. Third can be broader macros such as alternative asset classes such as bonds or gold or oil or the 10-year interest rate in US. All these fundamental factors, and then stable government or some geopolitical factors such as Israel and Palestine war, Russia, Ukraine, China, Taiwan. So all these factors are responsible for making the price move. This is what we have been made to believe. Like the media, the print media and the television media, they have constantly told us that, there was a war and that is why market fell. But is there a way to find out the market is going to fall without actually predicting the war? That is what I tell you is technicals. Now I am going to pinpoint each and every thing which is written over here and I will prove that wrong. So let's begin. Okay, for those who are active in 2018 and 19, they know that there was a slowdown in the auto sector in 2018-19. Now let us look at some of these figures. These are the annual auto sales growth figures. In 2015, the sales was up by 6.36%. In 16, 7.31%. 17, 9.7. 18, 8.54. So till now, the growth has been good. It is in line with inflation, somewhere around 6 to 9%. So a decent growth. But what happens in 2019 is that there's a degrowth of minus 11.43 percentage. And in 2020, there's a degrowth of minus 19 percentage. Now, if you are into 2019 and the report comes in April 2019 saying that the sales is down by 11.43 percentage, you would definitely sell your Tata Motors and Maruti. But do you know what the price was when the news actually came out? The price was 9,000, price of the auto index. News of the poor sales came out when the index was at 9,000. Whereas if you look at technically, the breakdown had already happened in September 2018 when the index was at 10,500. This is the head and shoulders breakdown, and it happened when the index was at 10,500. And when the news came out, the index was at 9,000. So if you understand, 15 percentage was already rubbed out of the market price before actually the news came out. Of course, the index did fell after that, but that was owing to the COVID crash. But if you pinpoint this reason that in 2019 the sales were down by 11% and that is why the market fell, no. All I am saying is that everything was discounted in the price before the actual news came out. Because as I said, there are many industry experts who had predicted this 2019 slowdown because in 2019 the BS6 engine was going to replace the BS4 engine. So there was unsold inventory of BS4 engine, and that is why people were waiting that whenever this BS6 engine comes, we'll buy a new vehicle. I myself bought a new vehicle after 2019 when the BS6 vehicle was launched. So this is my personal experience. And at that time also, we saw in September 2018 that the index had given a breakdown. And at that time, trust me, the numbers were okay. Like the results were also good. It is only after September 18 that the results started being bad. Now, this is the pandemic 2020. This is a report of April to June 2020 GDP numbers. So this is Business Today's article. It says that during April to June 2020 versus April to June 2019. So it's an apple to apple comparison. The same quarter is compared as compared to last year. So what has actually happened is that the GDP of India was down by 23.9 percentage. And do you know what happened in markets post that? If someone reads this, that the GDP was down is by 24 percentage year on year, then he will end up having a very negative view about the economy. But what actually happened was that in January 2020 itself, there was a COVID fall, and this slowdown is of the months from April to June. So can I say that as soon as there was COVID and there were lockdowns, lockdown happened here on 23rd March 2020, right at the absolute bottom. That was the day of the lower circuit when Nifty made a bottom. And one day prior to that, Modi ji had come and said that there is a lockdown across the country for 21 days. So that is the time when there was a lower circuit. But then index made a top at 12,420 and the lockdown was announced at 7,500. Can we say that something like this was anticipated and that is why the index discounted in advance? And what happens post that? Somewhere over here, when Sensex was at 32, 33,000, this article comes out that there has been a year-on-year slowdown of 24 percentage. But after that, the index rallied. The COVID cases were increasing, but also the index. Now, this is because the COVID fall had already discounted every bad news that was going to come after the lockdowns. So, and I remember a relative telling me that none of the companies are working. The companies are working at 50% capacity. Then why is the market going up? My only answer was that if Nifty can come down from 12,400 to 7,500, does all these 50 percentage production and does all this count? Because it is already being discounted in the prices much from advance. Market was already prepared. So if there is a bad news, market is of the view that, okay, I know the news, I have fallen because of it. I'm not going to fall for the same news for the second time because market already knows about it. Now, this is demonetization. This is the article of 2019. Now, it says that what has happened in the last 3 years after demonetization. So, the GDP was down from 8.8 in September 16 to 5% in September 19. So, it's a significant slowdown from 8.8 to 5. India's fiscal deficit is up by 2 lakh crores since 2014. Again, a bad news. Industrial production is down by from 5.5 to minus 1.1. Again a bad news. So all these bad news, once you read this newspaper in September 2019, you must be saying that last 5 years my market wouldn't have done anything great because these are not good numbers for the economy. But you look at the reality, the red line is the date of demonetization. And what has happened in the next 3 years, Sensex actually went up by 57.64 percentage when the economists were saying that the market is going to collapse because the economy is going to collapse. They were of the opinion that there is a parallel cash economy, and because these notes have been demonetized, like this economy is going to suffer. Probably true, everything happened, but did the market react to it? No. The the demonetization was on 8th November 2016. And can you go a little back? In 2015-16, there was a 25% correction in the market from 9119 to 6825. Now, this 25% correction probably took care of anything what was going to happen in the future. Market had already become cheap by 25% correction before the demonetization news was out. So, after the demonetization news was out, the investors, as in the market participants, thought that अब इससे बुरा क्या हो सकता है? If something which was available for 100 that becomes 75 and then there's a bad news, the stock will go up from there. It won't come down because some major change in the economy, or maybe the reasons are different. It was already discounted. Now this is the result wala theme. I have encountered people who say that result खराब है मैंने बेच दिया, or they say result अच्छा है मैंने खरीद लिया. But this is not the way it should be. Now this is Laurus Labs result. Let us have a look at the net profit. March 21 was 396, June 21 was 290, 258, and 142. Do you see a declining trend across 4 quarters? 396, 290, 258, and 142. So a declining trend, someone who has looked at the result of 142 and he's a patient investor since 4 quarters, he will get disappointed and he will sell. Do you know what was the result in the next 3 months as per the stock price? The stock price went up from 440 to 626 after this disappointing result. In 3 months, the stock price went up by 30% after this result of 142 crores was announced. So what does it mean? It means that this result was much anticipated, that Laurus Lab is going to probably struggle for next 2-3 quarters. And after the bad result, the stock price actually bottoms out because whatever that was expected out of Laurus Labs result has already come out, and the stock is all set to go up because they know that in the future the stock is going to the company is going to perform well. What happens in the next 2 quarters? 285 and 328. Again back to normal. So these 2-3 quarters of bad result were anticipated by market, and that is why you see a downtrend from year to year. The bottom was in February 2022 when you see this big candle. That was the day of the result. Laurus Lab opened minus 2-3% and was actually up by 7.5% in the next day after this 142 crores result was announced. So L&T Foods, the Dawat rice which we consume, just look at the results. In March 2018, the profit was 216 crores. In March 2019, the profit was 214 crores. So, okay, no growth. In March 2020, the profit was 277 crores. So, a jump from 214 to 277 is a good enough jump for any stock which is in a commoditized product. But what happens to the market price during these 3 years, from March 2018 to March 2020? Profit went up from 144 crores to 199 crores. But during the same period, the stock price fell from 110 to 13. Can you digest this? Like, if the profit is going up by, say, 40-50% in 2 years, from March 18 to March 20, should the stock price come down from 110 to 13? Now, some people will have argument that rice and sugar, all these are sectors which are very prone to government guidelines and all. But then 110 का 60 हो सकता है, 110 का 13 नहीं हो सकता because of all these factors. And during that time also in March 2018, that time also the market knew, right, कि these sectors are prone to government policies. Government come and say that exports are banned. or they will say that you need to decrease your export. There will be guidelines issued because there is shortage of food in India. All these things can happen. So don't you think ये सब price में आ जाता होगा? If you think that metals is a cyclical sector, and that is why it is valued at 2 to 3 times price to earnings ratio. So same is for sugar and rice. All the known devils are already discounted in the price. Then why did the price fall from 110 to 13? This is something. It is an outlier maybe, but then such outliers only make money. There was no reason for the stock price to fall by 80-90 percentage, and there is no fundamental reasoning to explain this. Many people will say that during 2019-20 the export was banned, but you look at the net profit now, the numbers are itself saying a different story. 144, 137, 199. A company which is making money would be least bothered whether the money is coming from domestic market or export market. So technicals actually save you from such accidents. I'll give you one more example, which is Solara Active Pharma. The medicine ibuprofen. This brufen was being is being manufactured by Solara Active Pharma, and during COVID time, this medicine became very popular because people were so much scared of COVID that as soon as they felt feverish, they took this medicine. So the sales of this medicine had been happening at a quicker rate, and this company thought that since our medicine is famous right now, so we do not need any distributors. So what they did was that pan India, they fired all the distributors and they said that we ourselves will manage the sales. Now what happens 1 quarter after that? Just track the sales from March 21, 444 crores, 405 crores, 401 crore, and December 21 is 100 crore. The sale collapsed by 75%. Now the reason of this is known right now because the result was announced in January 2022 when the company told that we are having a slash in sales from 400 to 100 because they removed all the distributors. There was no exchange filing while the act was being done. And you look at the market price in October. Remember, we are talking about December 21 results. So in September 21, in October 21, the price was 1530 when it actually broke down. Result was announced when the price was 950. And these three red candles, like these are two consecutive lower circuits of 20 percentage, and by the time you could take any action the price was already 330. And when was the fundamental reason out? It was out at 950 rupees. So someone who is in the stock at 1500, 1600 levels and is clueless that why the stock is falling, at this point of time he got a reason that why the stock was falling, but as soon as he got to know the reason, the stock price was already at 600 rupees. So a wealth destruction from 1500 to 950 is still okay, but a wealth destruction from 1500 to 300 is not fine. And technicals will save you from these things. If there's a weekly breakdown in any stock, it is a sign for the investor to exit the stock, at least the part quantity. And the reasons will follow. First, the changes take place in the price, and then the reason follows. So if you remember Russia-Ukraine war, Russia attacked Ukraine on 24th Feb 2022. And as soon as this attack happened, there was a concern that Russia will stop supplying natural gas to European countries. So this is September 12, 2022 article, which says that seasonality and uncertainty of winter demand for heating commodity, and considering the impact of lower supply due to invasion of Russia, it would mean that natural gas futures could experience a rally from October till the end of December. Now, these people are saying that because the attack happened in February and there is a winter approaching in December in Europe, and it is supposed to be the coldest winter in 40 years, the natural gas prices will shoot up from October to December because they are of the opinion that people would need natural gas in December. The government of European countries will do something to acquire natural gas. And obviously, because European countries are part of NATO and Russia is their enemy, Russia would supply natural gas but at a higher price. So the narrative is that Russia will sell natural gas but at a higher price. This was the newspaper article. But look at the reality. This red line is a line when Russia attacks Ukraine, and there is a cutoff of gas supply to Europe On 22nd August, remember the article was of September 12th. On 22nd August, natural gas made a top. And across the winter starts from October and it settles in somewhere in December or January, the prices of the natural gas kept falling. Can anyone explain this? Why did this happen? There will be reasons, but then the reasons will be hindsighted. Reasons will come out after everything has happened. Probably probably Europe and the NATO countries had already bought natural gas in great extent before the attack happened. There is always intelligence going around. Like India has RNAW, Pakistan has ISI. There are Russia has Mossad. There are intelligence around the world. Probably they know something about the attacks, and that is why the government is already prepared with higher stocks of natural gas. So would they really need natural gas once they have a stock? They wouldn't need. So this narrative gets defeated, and that is why natural gas fell from 1,000 to 180. A commodity going from 1,000 to 180 is obnoxious. It doesn't happen. Okay, so there are going to be elections in May 2024. There is a consensus that the current government is going to continue, like especially after the state elections. It is quite clear that who the country wants to vote for, and there is consensus. So many people are of the opinion that by the time Modi ji comes back again, the NDA government comes back again, the market will rally. The market will make highs on highs till the time there is election. But let me tell you what happened in May 2019. In May 2019 also there was this clarity that the current government is going to come back for a second term. So this orange line, do you know what is it? It is a day when our Prime Minister Narendra Modi ji had been his second term started on this orange line date, and that is exactly when the market topped out. So market rallied all the way from March to May, and that was in anticipation of the government coming back again. But as soon as the coronation ceremony happened, that was the top of the market, and market fell by 10% after that. Now, why does things like this happen? Because the people who are very happy will start buying over here. They will buy until here only to realize that the market is really coming down. So when you take late action into market, it is always deadly because you are not the only one who is expecting the current government to continue. The whole 90% of the India is expecting the current government to continue. So these narratives, they don't really work in the market. You have to go by what the price is doing. Another very famous narrative is that the prices of crude oil are negatively correlated against Nifty, right? Like if the price of crude oil goes up, Nifty should come down. This is the popular thing which is given out by these news channels saying that कच्चे कच्चे तेल की कीमतें बढ़ने से निफ्टी गिर गई. But this is not a true narrative. I'll tell you why. Because if you trust the stats from 99 to 2000, the crude oil prices were going up. The panel at the bottom is the crude oil price. The panel at the top is the Nifty. So you see a perfect positive correlation between Nifty and crude oil. Now, can anyone tell me or can anyone think of any reason behind this? If there is more demand for crude oil, it means that the economy is doing well. If there is more demand for crude oil, the prices of crude oil will naturally go up. And if the prices of crude oil naturally go up, it means the demand is there. If the demand is there, it means all the economies are doing well. That is why there's a perfect correlation between Nifty and crude oil. Why is there now? What if there is no demand? If there is no demand, price of the crude oil will fall, like it happens in a recessionary environment. And because the prices of crude oil are falling, it means that the economy is not doing well. And because the economy is not doing well, even the equity market of the country is not supposed to do well. So this is the perfect positive correlation. The trouble starts only when we enter an inflationary environment. When the crude oil crosses $100 per barrel, that is when the trouble starts because it causes a very inflationary environment. And because there is inflation, there is hike in interest rates. Because there is hike in interest rate, the bond market becomes attractive, and even the fixed deposit become attractive. Now, because these alternative asset classes become attractive, there is pressure on equity markets. So this is how all the things operate, and this is a very important aspect of multi-asset relationship. And again, this narrative that Indian market is totally linked with crude oil, and whenever crude oil goes up, market falls. This is completely false. So I hope I've convinced you that all these factors, politics, geopolitics, results, macros, fundamental, alternative assets, all these are just narratives, and narrative will change because of the price. It is not the other way around. So what do we do? अब करना क्या है? Nothing is working in market. All kinds of narrative, result, news, gold, oil, nothing is working. So how do we actually interpret the market? The answer to it is technical analysis. Now this is my introduction to technicals. That because something else is not working, we come to technicals. Now what is technicals? Technicals is nothing but examining and predicting price movements in financial market by using historical price charts and market statistics. Now, why this? That why will the historical price charts, because something has gone up after a certain pattern, doesn't mean it will again go up if it is forming the same pattern? Probably yes. Because price क्यों up move करता है या down move करता है? Because there is supply and demand. If the supply is more, the price will come down. If the demand is more, the price will go up. Why is there a concept of supply and demand? Probably I am feeling very bullish, therefore I'll buy. Someone else is feeling very bearish, therefore he will sell. It is emotions at play. I might be having my own reason, they might be having their own reason, and that is how market is being made. Someone is buying and someone is selling. So these are only emotions. There are only four emotions that run the market. There is greed, there is fear, there is hope, and then there is panic. And the same cycles again and again. So when emotions can have a cycle, why not the prices which are governed by the emotions of the traders and investors? You may write all the algo systems, but who algo systems are based on certain type of price movements or indicators. And why are these price movements? Primarily because there are emotions at play in the market. And this will always happen. It won't change because there is algo system which is commanding the price, because what is being fed into the algo system is again due to emotions of someone. So as we say, Bhav Bhagwan Che, it means that price is God. Always follow the price, and you may go wrong, but then at least you know when you will go wrong and you will take the exit accordingly. Whereas when you follow narratives, you'll never know that where you went wrong and you will keep wondering. Okay, so the basis of technicals is that prices are random to some extent, I agree, but by using technicals, one can find some method in madness. I'm not saying that you will predict a upper circuit stock every day. You will probably do that once in 2-3 months, but the probability of finding such stocks increases once you follow technicals. So basic synopsis of technical analysis, that we discuss fundamentals, right? There is valuation, then there is a quantitative analysis, there is qualitative analysis. Now there's a synopsis of technicals as well. Technical operates on demand and supply. Then we have something called as resistance or support. Then we have candlesticks and chart patterns, which we are going to study in the future, like in the second half of this seminar. So there are basic rules of the market. uh, it was written by Charles Dow, and Charles Dow had pointed out at some rules, which is now called the Dow theory. It has three rules. We have already studied one rule. One is that market discounts everything. All the examples that we have seen of all the narratives failing is covered in the first point. Like everything which is going to happen, all the narratives, all the reasons which are going to appear, market has already discounted all those things, so they are of no use. Second is history tends to repeat itself. Why does history tend to repeat itself? Because everything under heaven is cyclical. If you look at this chart, 1992, there was a Harshad Mehta scam exposure, there was a market crash. 2000, 2001, it was the IT bubble which got burst. 2008 was the great financial crisis. 2015-16 was the slowdown because of China. And I don't want to speak about 2024, but at least the timeline says the same thing. 92, 2000, 2008, 2015, 16. So every 8 years there's a meaningful correction in market. This time it will happen or not, we don't know. But since time is following a particular cycle, even the prices should follow a particular cycle. Have you heard this or not? मेरा time अच्छा चल रहा है या मेरा time बुरा चल रहा है. So when we believe in all these things in real life, why not markets? Market का भी time अच्छा या बुरा हो सकता है. So this was the thing, that history repeats itself. Now this is the best chart to demonstrate that You see the same pattern over and over again. You just draw this green line, and then there is a breakout. Breakout means that the break of the green line. Prices are not able to come out come above the green line, but as soon as they do, there is a rally. Again, prices coming down, green line, rally. Again a rally, again a rally. So when you are sitting over here and you have seen all these 5, 6 instances that the price goes up after breaking out, wouldn't you buy over here? You definitely buy over here because you have the evidence that if this thing happens, the price goes up. So this is the best chart to show you that how the history tends to repeat itself. Another one, the one stock that has been going rounds is IRFC. It has doubled in 1.5, 2 months from 80 to 160 or probably 180. You look at this chart. There's a long consolidation at 20 rupees. Price went to 37, almost double. Again, a long consolidation at 35 rupees. Price doubles to 80. Again, a long consolidation. This is the chart which I have drawn at 100 rupees. And today the price is 160. Why? Because I have seen a history in the chart that whenever after a long consolidation price breaks out in this particular script, it doubles. It has happened 3 times till now. Once at 20 rupees, once at 37, once at 80. Today the price is 160, and I had drawn this chart when the price was 100. So there is definitely a pattern which particular shares follow. Now the third thing which you are going to learn is we have learned market discounts everything. We have learned history tends to repeat itself, and now we are going to learn price moves in a trend. What is a trend basically? Trend is, you know that market doesn't go up in one line. If it has to go up, it will go up like this. So it will always make, not always, it is likely to make all these movements in the form of a staircase while going up. And while it is coming down also, market goes down by staircase only most of the times. So these are nothing but we call it higher highs and higher lows. If the price is 100 over here and after the another high it is 105. So I hope you understand 105 is greater than 100. That is why I'm calling it a higher high. Next time the price is at 110, and because the previous high was at 105, I'll again say that the price is forming a higher high. The trouble starts when the market stops making a higher high. Let's say the price was 110 over here. The price went down again, and this was a higher low. But then when the price next time topped out, the price was lesser than the previous high. That is why we call it a lower high. The trouble starts from here. The downtrend starts from here. So this is one of the ways of recognizing a change in market trend. This is a very, very typical textbook example. Of course, when we move to the chart, the things are a bit different. But to understand what is technicals and a basic introduction, this is what it is. The whole of technicals, I would say 50-60% of technicals is covered in the Dow theory. Yeah, so what are supports and resistances? We had covered a point that there are supports, there are resistances, there is breakout, breakdown. So what are these points? Any price or any zone जिसके ऊपर price नहीं जाता, price doesn't break about that zone, is called a resistance. Why? Because the price is resisting to go about that level. Then there are supports as well. Any price or any price level जिसके नीचे price नहीं जाता, price is getting support. Someone is over there to buy it. If the stock is not breaking 100 rupees, there is someone who is buying at 100 rupees in small quantities and making sure that the price doesn't go below 100 rupees. Probably because that person has a lot of money and he's thinking that this stock price is fairly valued at 100 rupees. That is why the price is not able to break 100 rupees because always there is some buyer over there. In resistance, there is always a seller who is at 120. Now that person is of the opinion that this share should not quote at 120. It is expensive. That is why he is selling little quantities at 120 every time. If he sells everything at once, the share price will crash by 10%. That is why he is using these techniques of supports and resistance. He will say that every time price comes to 120, I will sell it. And similarly, every time price comes to 100, I will buy little. Because if I buy entire thing at 100, by the end of the day, the price will be 110 because my quantity is such. So any level that the price is not breaking is called a resistance. Any level that the price is not breaking on the downside, it is called as support. Now, when the price breaks out of the resistance, it is called a breakout. And the price breaks down of a support, it is called a breakdown. So when I say that breakout aa gaya, it means that एक ऐसा level cross हुआ which the price was respecting until then. And when I say that the price broke down, it means that एक ऐसा level downside में टूट गया which the price was respecting until then. Till today it wasn't breaking, but today it broke down. Now another concept is the concept of polarity. What does polarity mean? That a resistance which was a resistance earlier, which has been broken out, now becomes a support. I'll explain. Like if the price was not breaking 100 rupees earlier, the price will break out. It will go to 110, then will again come back to 100 and it will find a support. So a price which was a resistance earlier now becomes a support. This is called the concept of polarity. Similarly, in support also, price was not falling below 100. That is why 100 was a support. The price broke down. It will again come back to 100 and it will find a resistance. Therefore, a price level which was a support earlier, once it breaks down, it becomes a resistance. So this is called polarity. So these are the 5 concepts that we need to learn. One is support, price doesn't go below the level. One is resistance, price doesn't go above that level. Breakout is what? Resistance breaking out. Breakdown is support breaking down. And retest. Retest is nothing but earlier resistance once broken becomes a support. Earlier support once broken becomes a resistance. Now this is nothing but a rectangle only. We can call this formation a rectangle. The price is range bound. Now can this also happen? That there is a higher high and higher low. Can I say that this high, higher high and higher high, these are resistances, and the bottom line, which is the higher low, these are supports. This is a rising channel, which looks like a staircase. Again, in a downtrend, there are higher highs and higher lows in uptrend, whereas there are lower highs and lower lows in a downtrend. So this is the resistance line because the price is not crossing this trend line, and this is a support line because the prices is not going below this trend line. And trend line, one more new term. What is a trend line? When you connect all the supports and all the resistances meaningfully as in, see, there are 3 points over here, A, B, and C. I have connected them meaningfully. I have touched all of them, and that is why I'm calling this as a valid trend line. Whereas in the second example, there is no logic behind drawing a line. It is not meaningful. That is, it is an invalid trend line. Now, all these lines which I have drawn, these are trend lines. So trend line is one of the ways of determining a support and a resistance. Now let me move to the candlesticks now. If the candlestick is green, would you say that the price has gone up? If the candlestick is red, you will say that the price has gone down. Right? This is a perfect layman explanation. If the price has gone up, it should be a green candle. If the price has gone down, it should be a red candle. But this thing, whenever the close of the day, if the close of the day was at 110 and the open was at 100, it means that the close is higher than the open. In that scenario, the price will be green. And whenever the close of the day is less than the open, it means that open hua 100 pe, it closes at 90. And because the close is lower than the open, the candle is red. Now, this is the most basic explanation of candlesticks, but it can also happen that yesterday the price closed at 100. Today, the price opened at 110 and it closed at 105. In this scenario, the candle will be red. But if you compare close to close, yesterday's closing was 100, today's closing is 105. It is still a positive day, but the candle is red. Why is the candle red? Because the close is lower than the open. So it is a misconception that because the price has gone up, the candle is green, and because the price has gone down, the candle is red. It can happen in such a way that if yesterday's closing price was 100 and today's opening price was 110 and today's closing price is lesser than 110, then it is a red candle. But when you compare closing prices of the 2 days, today's price is higher than the previous day, but the candle is still red. Of course, you do not need this for the purpose of this session. but then it is not as easy as one thinks that red means niche and green means upar. Okay, so till now, what have we done is we have learned the application of technicals. We have understood that why do we need technicals. We have learned the pitfalls of narratives and fundamentals. Now comes the actual work. Now, people who are watching this session, they will say that, okay, we are understanding everything, but please tell us how to use technicals. So this is the way we use technicals for long-term investing. I'm going to show you techniques wherein you can make good investments by using these concepts of technical analysis. Do you see the year over year 2009 and do you see the year over year 2021? So in 12 years, can you tell me one thing what has happened? The price has never crossed this blue line. So for 12 years, the price never crossed rupees 110. The breakout level for this stock was 110 to 112. But if you understand, this is nothing but a rectangle. The price is between two levels. नीचे के side पे it is around 20 rupees and ऊपर it is 100 rupees. So price was never crossing 110 rupees since 12 years. Now, as soon as the price crosses 110 rupees, it is a new history being created. Reason? Because from in 12 years, if the price was not crossing a certain level, today it has done that. It means that something very good is happening with the share price and with the company as well. If there is a decade long breakout, if no one was looking at the company for 10 years and suddenly there is an all time high price of 10 years, it means that something good is happening in this counter. So the price broke out in May 2021 at 112. Now results until December 2021 were quite ordinary. I am going to read out the results for you. Net profit was 32, 27, 35, 32, 46, 42, 65. So until December 2021, the results were quite ordinary. It was in the range of 27 to 35. Like ऐसा कुछ नहीं हुआ that profit went up by 40-50% to justify this price. Do you know what is the price of this company today? It must be around 800 or 900 rupees. The breakout had happened at 112. Now you see a blockbuster result from 32 to 46. This is the first time that we are seeing a 30-40% jump in profit. And by the time the result of this was announced, December 2021 result, sorry, March 2022 result, profit saw a good jump. But by that time, the price was already 400 rupees. At what price does the price break out? 112 rupees. And till the time there is any fundamental trigger, the price was already at 400 rupees. So that is why we say that technicals gives a better entry point. Now, as soon as this multi-year breakout happens, we know that something is changing with the stock and we should start the fundamental study of that stock. As soon as you come across this thing that there's a 10-12 year breakout, as soon as this breakout happens, you know that something good is happening with the stock because only a huge amount of buying can take the stock forward. Now, because there is huge amount of buying, it means that something fundamentally is changing in this company, and therefore you should study the stock and you look at the future results. 42, 65, 63, 68, 73, 89. A company which was struggling to make 30 crores per quarter, now it is making 89 crores per quarter. All this has happened in 2 years, and in 2 years' time, the price had already gone by from 100 rupees to 800 rupees. Exponential growth. Another example, same concept. From 2011 to 2021, 10-year breakout when the price was at 45 rupees. And we just read out the results once. Okay, 38, 37, next 68, 58, 58, 61, 109. So when the price broke out in April 2021, the price was 45. In March 2022, the result were exceptional. Sorry, this must be, yeah, March 2022, the results were exceptional. And by that time, the price was already up by 250%. Again, the same story like Encon Engineering, same in Usha Martin, the price went up from 45 to 110, and only then the fundamental trigger of growth was out. Another is the elephant, State Bank of India. What happens here is that price broke out at 350 rupees in Feb 21. For 10 years, SBI had not been able to break 350. In Feb 2021, it did. And SBI delivered outstanding result in September 2021 when the price was already at rupees 500. So if a company like SBI moves from 350 to 500, you can imagine the amount of fundamental triggers that it takes for State Bank to move by 30%. Why? Because it is one thing, it is a large cap stock, and it takes huge number of buying for a large cap stock to give 30% returns in 6-8 months. So this buying had taken place, and owing to the good results. Now I'll be sharing across the result with you. 6,495, 7,700, 9,300. Do you see this jump from 7,700 to 9,300? And this was actually after the multi-year breakout that had taken place. Now, this was the first indication which told me that PSU banks are going to outperform because the leader of the PSU bank had given a 10-year breakout. Okay, now two cement companies that were taken over by Adani. One is ACC, other is Ambuja Cements. Ambuja Cements gave us 4-year breakout at the price of 250 in Feb 21, and Adani acquired Ambuja in September 2021 when the price was 400. Now this jump from 250 to 400 happened in 7 months in a large cap stock. Going up by 40% in 6 months is no small deal. It takes a lot of amount of buying to come to that level. Technicals knew something was cooking because there is due diligence. There are various procedures that happen before a merger, and there are always news and rumors going around that someone is planning to acquire these two cement companies. And frankly, there were, and there comes the 5-year breakout, and the price moved from 250 to 400 in 6 months time. Same went on for ACC also. There was a 2-year breakout. So again, there was a 4-year breakout. Price had not broken 2018 high since like for 4 years. Then suddenly it breaks out in 1750, and Adani acquired ACC in September 21 when the price was 2400. Now this rally can be correlated with the market rally as well, because during the same time when even the market was going up, but you look at the other cement companies, they weren't doing particularly well. Only these two were doing well. And the news broke out in this sector, these two companies only. This is the rock star of 2020, Aarti Drugs. The reason was that it went up by 6x in 6 months. What was the reason? The reason was that there was COVID in China. China was under a complete shutdown. And because Aarti Drugs is a API company, it got the benefit of all the outstanding orders of China. Like people moved from China to India. And because this company was prepared, it could actually deliver whatever orders that were coming to it. And therefore, the profit doubled from 136 crores to 258 crores. But during the same time, from May 2020, when the price was 200, the price went up by 5 to 6 times in 6 months. And by the time, if I remember in September 2020 or so, yeah, the price was 1100 rupees, and then the ordinary result started, but the price had already peaked out before that. And by the time it is March 2021, and when the profit has nearly doubled, the price has already corrected 30-40% from the top. So the price peaked out before the results peaked out, and the price started going up before it was in the results. Now, Hindustan Unilever, somebody who is of 45, 50 or maybe more age, they will tell you that HUL was a brand in 2000 also, and it is a big brand in 2024 also. So HUL was such a big name even 2 decades earlier. But what happened to the price for 10 years? Price wasn't doing anything. There may be fundamental triggers also for this breakout, but then to cut short, in 10 to 11 years, the price had not broken 320 rupees. Once it broke 320 rupees, the entire rally started. I'm sure there are fundamental reasons that there was some capital restructuring story and all. But then after 12 years, the price today is 2500. So in 12 years, if you get 8x return in a stock like HUL, you don't need to invest in mid caps and small caps, right? Again, this is Reliance. Reliance broke out in Feb 2017 when the price was 480. Today, the price of Reliance is 2700. So in 6 years, Reliance has actually given 5x returns. Now there are triggers like there is a Geo, then there is Reliance Retail. But if you look at the results from 2018 onwards, Reliance's profit has gone up multiple times, whereas the market knew about it in 2017 itself. Once you scroll down the result, 29,800, 36,000, 39,800, 39,880. Until now, until March 2020, it is all okay. It is normal growth. But from March 2021, 53,700, 61,800, 74,000. So the actual growth in result, it actually started from March 2020, but the price started increasing from Feb 2017 once there was a breakout of again a 12-year, 11-year breakout from 2009 to 2017, 8-year breakout. Okay, so till now we have learned about only buying, buying, and buying. When do we sell? When do we sell our investments? There are two things for that. One is sell decisions by using RSI, and the second is sell decision by using crossover and confluence of EMA. So what is exactly RSI? I'm not going much into the technicals and explaining what is RSI, but just remember one thing, RSI is like a speedometer. If the stock price is going up rapidly, even the RSI goes up rapidly. If the stock price is going down, even the RSI goes down. So you can say that it is a bullish indicator. Why? Because it moves along with the prices. The conflict happens when RSI and price, they give different directions. I'll show you how. This is the price. Do you see the price going up? But at the same time, the RSI, the bottom panel, it is coming down. It means that if you are on a highway and you know that there is a toll plaza, from fifth gear, you will come to third gear and you will take back the accelerator and you will wait for the car to slow down. The car has slowed down, but it is still going ahead. Similarly, over here, what is happening is that the price is going ahead, but it has slowed down its pace. Someone who is sitting beside you and is blindfolded, if you are in a highway at 120 kmph and you suddenly come down to 40 kmph, you will realize that the speed has come down and therefore this person is going to stop the car. Similarly, in RSI also, because the speed of going up has come down, we know that the car is going to stop. So when the price is going up but at a slower pace, it means that the car is going to stop. A fall from 838 to 352. Now at 838, there was a RSI divergence. RSI divergence means price going up, but the indicator, in our case RSI, it is coming down. And that is actually when we make our sell decision. And the price corrected from 838 to 352. And all these things happened within 1.5 years. Second is Nifty. Nifty made a top at 18,604 on 19th October 2021. And it made a bottom of 15183 on 20 June 2022. So in 8 months, Nifty corrected by 18%. But the starting point of this correction was, is you see a RSI divergence in Nifty. The price was going up, but the RSI was coming down. In all other cases, what you will observe is that RSI and price are going similarly. Like यहाँ पे price went up, RSI went up. Price went down, RSI went down. But this is a particular situation when the price is going ahead without any support from the relative strength index, which is the RSI. It means that the strength is coming down and therefore the price is supposed to fall. Tanla platforms again, the price going up, RSI coming down, and the great fall from 2000 to 500. Now Adani Enterprise, when the price was 4,000, there was a RSI divergence, and this is November 2023. When did the Hindenburg report come out? It came out in this is November 2022. The Hindenburg report came out in January 2023. Did Hindenburg report see this RSI divergence and then release the report? Not really. Like all these triggers were already present in the market that something is going to happen with the Adani stock, and therefore technically it was a sell. One of the mutual funds, they sold huge quantities of Adani Enterprise because the technical system asked them to sell. That mutual fund is famously known only to follow technical analysis for making buying and selling decisions. So they got it right by using probably one of the areas was this RSI divergence that they looked into. Again, Hindustan Copper price is making a higher high, but the indicator is not making a higher high, and the price corrected from 197 to 81 rupees. And would you believe that even at 81 rupees, this is a negative divergence. At 81, there was a positive divergence, which is a different concept altogether. 2008 crash, price was making a higher high, RSI was not making a higher high, and then followed this crash. So if you are one of the lucky participants who saw this RSI divergence and you decided to stay in cash, you would have survived at least some part of the market crash. I remember my father telling me that in December 2007, people were giving targets of Nifty was sorry, Sensex was 21,000, and there was a newspaper article on economics, whatever newspaper, saying that Sensex will reach 1 lakh within some years. So the euphoria was such. From at a level of 21,000, people were giving targets of 1 lakh rupees. And at that time, there was this RSI divergence. So such was the madness during that point of time. Now this is the COVID crash. The index is Dow Jones. Price was making a higher high, but the indicator was not supporting it. And the 2020 crash followed. Now this RSI divergence was of 2 years. Throughout the 2 years, there would be people who were anticipating a market correction, but it never really happened. But they got the rewards in 2020. Those who had the conviction of not investing because their system wasn't allowing them to, they were benefiting. Now, another use of when to make a sell decision is moving averages. In moving average, there's a concept that certain shares have a tendency to respect certain levels. Now, if this is 30 EMA, what is it? These are moving averages. Moving averages matlab, if I'm saying 30 EMA, it means that this is the average price of the last 30 days. That is why we call it as 30 DMA. In this case, it is a monthly chart. It means that one candle stands for 1 month. So in this case, 30 EMA means last 30 months. So this is the blue line is the average price of the last 30 months. So in Asian Paints, you see that from 2009 to 2024, this blue line has never been broken. What can be the reason for this? Because there are mutual funds who like Asian Paints, and because the Asian and the valuation in Asian Paints are very hefty, and they have stayed hefty for a long time. Now they are not able to make a decision that at what price do we buy Asian Paints, because fundamentally Asian Paints has been at 100 P since a long time. So how do we buy Asian Paint? Should we buy it at 80 or we buy it at 120? No one knows where it will go. It can even go to 200p, and that time you would think आज मैंने 100p पे लिया होता. So this is the way they buy. They follow a particular moving average that the share is following. And I hope you realize that if there are 40 stocks in a mutual fund, now they won't be adding another 40 in the next month. They'll be adding only 3 or 4. 36 stocks are the same. So they need to buy in those 36 stocks. And how do they allocate? That मैं कौन से time में कब buy करूंगा? For that, probably they are using moving averages, and that is why you see that certain moving averages they stay undefeated for a long period of time. For example, Asian Paints 30 EMA has never been broken convincingly. Then in Hindustan Unilever, 40 EMA on a monthly chart has never been broken since 2010. In Pidilite, this is again 40 EMA, 2009 to 2024. It has never been broken convincingly. And you look at this chart, GMM Pfaudler, 200 days moving average. It means that last 200 days ka average price. In 2016, the stock price was 100. And in 2020, when the 200 days moving average was broken, the price was 1500. So from 100 to 1500, you just take out one rule that I will sell the stock when it goes below 200 days moving average. It never did. Of course, for buying the stock, you need your fundamental studies, but this is the way you trail. At 1500, probably the stock was very expensive. But till the time the price was not below 200 days moving average, I'm not going to sell. So there is another concept of a golden crossover and a death crossover. There are two very famously used moving averages. One is 50, other is 200. So whenever 50 crosses about 200 days moving average, it means that the bullishness in the last 50 days has exceeded the bullishness in the last 200 days. It means that there is momentum. So whenever last 50 days moving average crosses above last 200 days moving average, it means that a bull rally has already started. Whereas in a death crossover, again, there are two moving averages, 50 and 200. If the 50 days moving average is below the 200 days moving average, it means that the downfall in the last 200 in the last 50 days is greater than the downfall which has happened in the last 200 days. It means that the bear rally has already started. Now it can be used for investors who are doing SIPs into mutual funds. Whenever Nifty does a golden crossover means whenever 50 EMA crosses about 200 EMA, you do bulk of your SIPs at that time, that point of time, because it is likely to give better returns. Now historically, in Nifty, whenever this crossover has happened, Nifty has doubled in the next 2 3 years. So this is a great advantage for anyone who likes to trade or invest in mutual funds and ETF. Now showing you certain examples. Golden crossover on weekly chart. Price of Adani Enterprise back then in 2017 was 43, and that time there was a golden crossover, and there's a technical breakout as well if you draw a trend line. So both the things happened together, and you know the price of Adani Enterprise today. It happened at 43, and today from that table the price went up by 100x. Another one is the COVID crash, death crossover. 50 EMA crossed 200 EMA on the downside. Result was the COVID crash. Now this was when the act of the crash was already happening. Now midway through the crash, there was a death crossover, and half of the crash happened after that. So we can safely say that at these levels, at around say 9,000 levels of Nifty, there was a death crossover warning, and Nifty bottomed out at 9,500. So there was much downside left after the death crossover, whereas the golden crossover happened in September 2020. The 50 EMA crossed 200 EMA. At that time, probably the Nifty was around 10,000 levels. And as I said, Nifty doubles in the next 2 3 years. Today, Nifty is at 21,000. Now, another one is that uh, there was a golden crossover at 55,000, and the Sensex went from 55,000 to 67,000. Today, the Sensex is at 72,000 probably. So 55,000 to 72,000. And anyone who wanted to buy, he could have simply bought at these levels and just waited for a death crossover to reverse his trade. Till that time, he is in profit only. He is sitting at 25% profit from these levels. So this is a daily chart. Now, because the price had consolidated between 2015 and 2017, market had not moved much because the top of 2015 was 9119, and which actually got removed only in 2017. For 2 years' time, Nifty had not given positive returns. Even during that kind of a market, there was these moving averages worked very well. See, there's a death crossover here, then there's a downfall, there's a golden crossover here, then there's an uptrend. Now again, there's a golden crossover and the larger uptrend. The famous Yes Bank in April 2019, the price was 240, and then happened the death crossover, and a year later, the price made a low of 6 rupees. So during this point of time, there were fundamental triggers also. RBI was warning Yes Bank that you guys are not showing your NPS correctly, and there were these red flags that RBI was warning Yes Bank that there could be a asset liability mismatch, or there could be a higher NPS than what you are reporting. All this was in the news. So the high of Yes Bank was 400, but the sell signal came at 240. And a year later, the Yes Bank was available at 6 rupees. So anyone who was not into uh, fundamentals or technicals or not following news or anything, they would have sat through the entire fall of from 420 to 6 rupees. So it was, at least it was better to exit at 240. You could have saved half your capital. Yeah, so this is confluence of moving average. The four EMAs that are widely used are 20, 50, 100, and 200. So the logic behind this is that whenever the price has done nothing since 200 days. Do you agree that if the price has done nothing since 200 days, then all the four moving average will be more or less at the same level? The price was at the same level 20 days back. It was at the same level as 200 days back. So somewhere there is a confluence being formed. Now, whenever price breaks out of the confluence, it is the right time to buy for a good rally. You see over here, there's a confluence of 4 EMA and there's a technical breakout. And as soon as there's a breakout, the price has gone up by 20%. Even over here, this is Sensex. This was in 2000, and this entire rally of the tech boom happened after the confluence of all EMAs. Again, this is Bank Nifty, and this is after the COVID fall. This was a COVID crash. After the COVID crash, there was a confluence of all the four EMAs. Price was above all the four EMAs, and therefore it was the right time to stay invested. This is one of the best examples. There's a technical breakout also of the trend line, and there are four EMAs at the same price. Then the breakout happens. The stock price doubled in 7-8 days. Again, this is March 2023, right from the point where the rally began. And there was a confluence of EMA. There was a inverted head and shoulders breakout. And the result was this amazing rally. Okay, so do we need time for addressing queries? Because I think we are already halfway through the session. So can we take up the queries first?
I request my viewers to place their queries. Till now, I guess that you were very clear with the presentation and very clear with sending the messages that how your capital should be protected, and no matter what, the results, favorable or unfavorable, are always going to be present. What's more important is the reaction of investors for those results, and you were very much clear in sending that message to all of us. And one more thing I would like to point out by you, that you have constantly focused to protect our wealth, to protect the capital that we carry in the market. For that, the cutting finger is easier than cutting the entire hand. And how to save oneself from wealth destruction, and the primary motive with which we enter into market should not be the wealth creation. It should in fact be the wealth protection from wealth destruction. And you were very clear with the messages, the illustrations, that the readers, the viewers have understood it so well that we do not get any query as such. But we have one query from Sumit Jain sir of Jaipur. He is requesting to have the deciphering of chart of I and the chart of L.
Chart of IL.
L. L for London.
Okay, deciphering the chart of. I did not get the last part of the question.
The viewer is asking to decipher the meaning of chart of I as well as the chart of L that is present in the technical analysis.
Okay, I assume he's asking about log charts and linear charts. So there are two kinds of charts. One is a log chart. Log chart goes up in percentage wise, whereas a linear chart moves linearly. Like if there is 100, the next level is 110, next level is 120, 130, 140, 150. So there is a linear gap of 10 rupees in every price, whereas in a log chart, the movement have like the next level is the percentage level. It goes up by a particular percentage. So I assume what he's asking is log charts and linear chart, but I did not get his question entirely. I and L. I did not get it.
We would like to again ask for the clarification from the side of viewers so that his query can be addressed. Meanwhile, we can take another query from Navdeep Sarpal sir of Mohali. He is asking for the clarification of EMA crossover, that how it can be set up in our charts to be seen.
Yeah, so the website that I use is tradingview.com, and it is a free to use website. You go to the indicators and you select EMA, and you can select two EMAs. One is 50, other is 200. So you will get the golden crossover and death crossover over there.
Okay, okay. One query from my side, sir, if you would like to address.
Yeah, sure, man.
What is the use of Bollinger Band? Do you suggest to use the Bollinger Band for the analysis of technical charts that are present?
Yeah, sure. Bollinger Band is nothing but there is a 20 days moving average, and they use standard deviations above and below the 20 days moving average. If the moving average is 100, then they take a standard deviation. They take the second standard deviation and they add it to, I can show you it on my chart also right now. I'll just open my screen and show you.
It's often said in Gujarati five acronyms that Bhav Bhagwan, Volume Pahalwan, समय बलवान, सेंटिमेंट शैतान, सौदा जो घुमा सके वही सुल्तान. I guess that technical analysis of today's lessons that we carry would help to carry out the trade in a better way.
Yeah, and trader is Pehlwan.
Yes.
Yeah, so this is Nifty's chart. Now, if you want to open Bollinger Bands, then you see that the price is hardly moving out of the channel. The orange line that you see is the 20 days moving average, and the upper and lower level is decided by volatility. Like they calculate standard deviation and they add they add standard deviation above and subtract below. So there is a envelope which is getting created, and it is believed that see over here the price was at top of the Bollinger Bands. Now there is 95% probability that the price will fall back if you're using second standard deviation. If you're using first standard deviation, then the price is there's a probability that the price will stay 67% of the time within that band. And if you're using third standard deviation, there's a probability that the price will stay within the band 99.6%. So this is what I'm talking about, standard deviation 2. If you make this 3, then you will get a nearly 100% result when the price has never gone out. Now, good that you took up this query, since I'll be showing you something that how to predict crashes in equity market. Okay, I'll be opening BSE small cap index. What I will do is that I will take up 200 days moving average and I will take the third standard deviation. Okay.
There is another question from WIRC. Preeti Jha, madam of Mumbai. He is asking that we need to check everything you have pointed out, or we should check only price and RSI.
No, there are different things in technicals, like there are price patterns, candlestick patterns, bar chart patterns, and along with that, there are indicators. So everything needs to be, used together. Now, it is a long process to learn technicals. It usually takes about 20-25 hours to learn, say, 20% of the technicals. But even that 20% of technicals is enough to trade into the markets. Like, obviously, you cannot be practicing everything being a CA. So you cannot be practicing everything being a technical trader as well. So even this knowledge of 25-30 percentage, if done very diligently, it is very useful for a trader. And so this is the 200 days EMA plus the third standard deviation. Whenever the price goes up to the 200 days EMA, you can anticipate a correction. See, here it has gone. You can anticipate a correction. Now here the price has not broken it, but there was a consolidation. And over here, March 2020, it had broken down, but then it did not have further scope to go down. And therefore this rally. If I show you some other examples, There were examples in Nasdaq as well. See over here. In before the March 2020 crash, the price was at a higher end of the Bollinger Bands, and then came the crash. So if the price is at these levels, there is a possibility that the price will not go above or go below those levels. See, this December 18, the price was at the Bollinger Band level, and this is the extreme Bollinger Band because we are using 200 days EMA plus third standard deviation. It means that there is 99.7% probability that the price will reverse from here, and the price actually reversed from there. The returns in that time, what was it, from 5,800 till the next high 7,800. In 2008 also, there must be the price must be at top of the channel. Yeah, so this is November 7, and you see a crash that followed. Yeah, so all these indicators and everything have to be studied individually, uh, and then you can mix it up and then start trading. So there's a detailed study which is required, and institute is coming up with a course of fundamental analysis and technical analysis. So you get a detailed study of technicals as well as fundamentals in that course.
Technofunda. There is one more query from Rajat Agarwal sir of Gorakhpur. He is asking how to shortlist companies with good fundamentals which are trading at below their EMA levels and have potential upside.
For fundamentally good companies, you can use a scanner, like a company which is delivering a good ROE of about 15%. The sales growth is above again 15%. The EPS growth, even that should be above in double digit figures. So that is how you shortlist a good fundamental company. And for once you have shortlisted the company, you can always go and see technically that which company is on verge of giving a good breakout on weekly and monthly chart. And regarding the EMA thing, do not prefer companies which are going below a certain EMA. You should always stay with the strength rather than staying with the weakness. You can buy it expensive and sell it more expensive rather than buying it at cheap and selling expensive.
Another query from Rajat Agarwal sir itself from Gorakhpur. He is asking, and should we take stop loss while investing in the shares for mid-term and long-term?
Yeah, I would recommend that. Because for medium term investing, if you take a 15% stop loss and the reward which you are expecting is around 45% in 1.5, 2 years, then a good overall risk to reward ratio will ensure that that you remain a profitable investor. Because if you're taking a loss of 15% and booking profits at 40%, what happens in this is that even at 50% accuracy, you will end up being profitable.
Correct. Another query from Swapnil V. Regesar of Mumbai. He is asking for explaining about alligator indicator in moving average trend analysis.
I have heard about the indicator, but I don't really know about it. So, and I've never used it.
What are the other tools that you suggest to have the technical analysis done?
Like as I said, I personally use RSI or Super Trend, and there is MACD, and there is ADX. So it is quite subjective from trade to trade. The first preference which I give is always to the price action. If the price action is positive, like there are n number of chart patterns and candlestick patterns in technicals. So once the price is supportive, then only then I look at the indicators, and indicators are moreover just to ensure that I'm not going wrong. They just provide confirmation to my price action. So basically, I am a 75% price action trader, and the rest 25% is the indicators that I use.
Okay. Thank you so much, sir, for sharing your valuable knowledge and giving us the valuable time. I,
Thank
on
you.
behalf of committee, would like to extend our thankfulness to share your valuable insights for technical analysis. Thank you so much, sir.
Thank you so much for having me here. It was a pleasure for me.
With these words, I would like to welcome the second speaker, that is CA Nikhilesh Soman sir, who is going to conduct the webinar on the topic that is trading in equity markets. Nikhilesh Soman sir is practicing CA since more than 2 decades, and he is not only having the huge professional experience as chartered accountant, but has been an active personality to share his wisdom and knowledge via many workshops. Sir has developed this unique method called as follow the rule. He, apart from these achievements, Sir has also been the author to many articles and magazines. I, on behalf of Financial Committee, would like to welcome Sir to share his um, and give us personal knowledge that he has gained throughout the experiences. And we would like to welcome Sir to express his opinion on trading in equity markets. All over to you, Sir.
Okay, thank you, madam. First of all, let me thank our Central Council Committee on Capital Markets for giving me this opportunity to share something about the trading in equity markets. I'll go with very simple logical terms. Already, all the learned members, including myself, we were listening to our fellow colleague Prakash, who really has given a great insight of technical analysis. Myself, I have done my technical course in the year 2006 itself, and I think still the technical parameters have not been changed, though the market is changing all the time. But the technicals are still same, what I have learned in 2006. Never mind, but still, for last many years, I myself am not using those analysis or we can say tools for my own trading. I'm an option trader. So I do mostly intraday trades. But for equity, like for my own portfolio, definitely I use some like breakout strategies, or we can say breakdown sometime also to get out of the particular stock. But I basically follow the data analytics which is available easily on NSE website. The basic forte of myself is also trading, and I personally feel that by the we can say if you are a good trader, if you are a professional trader, still you can what we can say you can create a wealth also. Like most of the people say, the wealth can be only created by a good investment, but my own experience tells me that wealth can be created by a good trader also. And I have seen many traders in my life who has really created a huge amount of wealth in their life. So I am of the other opinion that trading is also can be useful to create a wealth. So let's go ahead with the presentation. That trading in stock market normally, already we have seen that breakouts, breakdowns, then there are many tools which are available which can you predict in advance which stock will move. But I'll give some other what we can say trading mantras or logical points which you can use while selecting the, I can say, the selection of stocks. Okay. First of all, let me go through the disclaimer that I'm not an insurance agent, I'm not a broker or sub broker, I'm not a mutual fund distributor. Basically, I don't believe in mutual funds. Since last 17 years, I'm sitting in front of screen. Neither I'm selling any products, and whatever views expressed here are totally my personal views. So everyone has requested to take proper advice from your financial advisor or any other CA before going into any trading or investment decision. Okay, so whatever I will share in next 1.5 hour or maybe 1 hour will be totally my own experience of how basically I learn in market, or still I'm learner, or I can say ki I'm still learning every day, even or every night. Even I also study for a half an hour, sometimes for 1 or 2 hours, like in which stocks I need to trade tomorrow. Okay, so it requires really good efforts if you really want to be a professional trader. It requires studies. Okay, so it is not like that once you become a chartered accountant studies gets over. In trading also you need to update yourself, you need to study yourself. So basic, we are here, the fight is between bulls and bears in market, as everybody knows very well. I am a bull kind of a person, so normally my maximum trades are on the long side. I very rarely I go short, to be very precise. Otherwise, whenever market falls, I just keep mum. I wait for the opportunity. I wait for the reversal, and whenever I feel there is a reversal in market, now we can go long. At that time, I personally initiate my trade. So I'm not that type of a trader who always like many of the people, they do swing trading, or always they buy also, they sell also in a same day. Normally I believe only in buying, and when there is a strong conviction that definitely we should go ahead, like my fellow member said, ki there is a breakout. If we see the breakout, then definitely I go aggressively in market. But otherwise, if the market is sideways, if the market is not going anywhere, in that at that time I prefer to only watch the screen instead of going for any trade. Okay, so my conviction is most of the time I go for a long trades, maximum times. Otherwise, very rarely I go short. And in option trade, my other strategies, usually I do only intraday. I never carry forward any position. Though the settlement is 1 month, or maybe we get 20 days, 25 days, maybe 10, 15 days, maybe 2 weeks are still there for expiry, people say. But still, for last many years, I am doing intraday trade. So whatever the profits or losses in a day, I just square up the things and I move ahead. And the very next day, market may gets open gap up, or may gets open gap down. After settling down the market, also I can we can trade. So I personally feel चैन की नींद लेने के लिए I never carry forward any position in options. Okay, so it gives me sukun, it's give me a good what we can say sleep at night. And then there is no need to see where the gift nifty is trading, where the Dow Jones is what are the HDFC ADRs. Normally now people last 4 5 days, or maybe last 8 days, people are watching where the HDFC ADR is going. So that things I don't do, because we don't carry any position. So har din every day there is a new game. Okay, for me. Normally this is a picture of every trader at 9:15 whenever we start as an intraday trader, or maybe whatever like you call it yourself. Like we are in a such a mood, like कभी कभी तो अपन को लगता है भगवान अपन ही है. Okay, so everybody is what सबकी जेब भरी हुई रहती है, huge margins. Okay, and the brokers are also nowadays giving huge margins sometimes. So we start a day with such kind of a conviction, and with a confidence, sometime into bracket overconfidence, like whatever I will do, definitely I will going to get the success. So this is a usual picture of a trader, how it look like at 9:15. Okay, he is ready with the money, and he just is just waiting for the market to start, and then he will like start his trades. And after market starts, after some time, you see, if the people are doing the trades without any what we can say their own studies, without knowledge, what basically the outcome of those trades are, as you know very well, the traders at 2 p.m, like normally most of the time their 10 or 20% of the capital must have wipe off. If they are an option trader, maybe if they are an intraday trader and going leverage, sometime it happens that 5 to 10% losses also can happen if the market is like falling heavily and they are long, or if the market is going up and they are heavily short, anything can happen. So at that time they think कि जब तक ये खेल खत्म नहीं होगा अपन इधर ही छे, because they have still a conviction that still there is a 1.5 hour left. So anything can happen. Market is a place where the what we can say any miracle can happen, and they stay with their position. Normally they don't cut their positions. They believe that in last 1.5 hour there will be some miracle, and then definitely they will make up their losses whatever they have incurred. And at 3:15 finally the time comes where their positions get automatically squared off, okay, by the rule, because if you take a leverage positions at 3:15, your positions get automatically square off. Then they realize that nahi bachega, main idhar hi mar jayega. So this is a picture of a normal trader who trades in equity markets intraday without any knowledge, or without having a proper tools, or without any we can say homework or studies. So this is a usual picture of a trader. Okay, so let's come to some trading mantras. I'll just wrap up the things because I think I have only 1 hour left. So see, these are basically the points which you need to remember. See, technical analysis will definitely help you to see or to what we can say choose the stocks maybe, or which stocks you will buy and which stocks you will short. That definitely technical may help you, but some what we can say mantras you need to remember before looking at a technical analysis. Some we can say points, if you check with the particular stocks or maybe the sector, then definitely it will be easy for you to use your tools on that particular stock. So first thing, if you are a trader, never buy for a fixed time, or if you are a medium term investor, you are positional trader, never buy for a fixed time. Like many of the times people say ki I'll buy for 5 days. They use some margin funding with their brokers, and then there's a limited time is given to them. Like many brokers have an arrangement like on Monday they will give you 10 times margin, but at any point of time on Friday you need to cut short or you need to sell off your position, because that margin cannot be carried forward. Okay, so those things basically one should avoid while doing the trades in market. So never buy for a fixed time. You should have a target in your mind, like I am buying this stock and my expected target in maybe a 5 days, maybe a 15 days, or maybe a month. Say you can say, if you are not an intraday trader, say positional trader, then month, or maybe my target in next 3 months is so and so. Okay, and while setting a target, you should have stop losses in also in proper place. So if anything goes wrong, when you will come out. So don't buy any stock for a fixed period of time. That will never going to help you. You have to set your targets. Then trading in always good volume or A group stocks only, because most of the time in many WhatsApp groups or in many what we can say places where Telegram channels nowadays are there, and all these YouTube's mantras, many a times at 9:50 or maybe in the morning you will get some tips, or you will get some unsolicited advice, and they will give you such a particular share where the volume is very very less. Okay, and what happen is when the volume is very very less, you will definitely come to know that the script is basically operated by somebody. Okay, and when the volume is less than 50,000 or maybe less than 10,000 in a day, and if you trade in that stock and if you buy suddenly 500 or 1,000 quantity, then I'll assure you that that stock will never go up in a particular day. Okay, so always trade on those stocks which are having a good volume, say in lakhs of quantity or maybe in crores. So that will definitely, because that will give you entry exit, and definitely the prices will determine by the forces of demand and supply. Otherwise, if you trade in those share where the we can say the gap between the buyer and seller, that is called spread is also very high, then it will be very difficult to trade, because sometimes what happens, buyer is at 350, seller is at 357, so there is nobody in between. So those kind of stocks please avoid. Many a times without any knowledge people just go and buy the stocks, and then suddenly they see there is a what we can say 5 to 10% downfall also in a similar day. So always avoid those stocks. Just trade in basically A group or a good volume stocks that will give you exit opportunity also in a same day. Then you need to do the sectorial study also, which sectors are currently doing good. If you are an intraday trader, which sectors earlier yesterday, which sector has already done good things, and whether it will continue for tomorrow. Definitely your analysis will tells you in the night whenever you will study yourself. So that you need to study. Ki now suppose for example the IT sector is doing good, or maybe the pharma sector is doing good for last 2-3 days. So definitely find out stocks in pharma sector after with the help of using your own technical tools or maybe other tools. But you need to first understand which study is doing, which sector is doing good. If you are a we can say buyer, and suppose if you want to short, then you need to find out which sector is doing bad. Okay, though the sector which is doing bad, there you may get a shorting opportunity also. Then you can use your analysis over there. But you need to study which sector is doing currently good. One more thing is very important, that never borrow to buy shares or never borrow money to trade in markets, because in last 15-16 years I have observed many people they start with a very small amount of investment, say 50,000 or maybe 1 lakh rupees. That also sometimes they borrow money because someone tells them कि यार 1 लाख रुपया डाल दे, महीने का 2-3% तो किधर नहीं गया, 4-5% भी मैं दिला दूंगा तुमको, like I'll give you some tips and you can able to make 5 to 10%. And the innocent people, they just borrow the money, and you know what will be the outcome. They'll lose their entire amount of capital, as well as then there will be a big problems in their life also. So always avoid borrowing money for the हाँ, कोई भी आपको ऐसा बोले कि घर बेच के shares ले लो, like usual dialogue we heard where there is a euphoria in market. Many brokers also tells कि घर बेच के stock ले लो. Okay, so that time I personally feel when people start saying like this, when broker will advise like this, घर बेच के इसको ले लो. So in my opinion, that is a right time to exit from stock market. That is the right time to exit from that particular stock. Without using any technicals or whatever it may be, just by the what we can say logic. If people start saying पूरा गांव अगर बोल रहा है ये ले लो, that means a wise person will definitely come out of that particular stock. So then learn to book profits and learn to short sell. Though, as I said, I'm not so much we can say conversant with the short selling. I usually avoid short selling. But if you are if you want to become a professional trader, you have to do the short selling also. I'm not saying that I'm not a short seller, but I do very less amount of shorting in market. My 90% of the trades will be on long side, and maybe a 5 to 10% trades will be on the short side. So you must able to understand if the market is going up, just go long, and then not only go long, you need to decide when to book profits also. Okay, if you are an intraday trader, you have to set your own targets. ऐसा नहीं कि stock लिया और छोड़ दिया. Okay, I'll see at 315. Then stock may go up by 5% and suddenly stock may come down also by 5%. Anything can happen in markets. Okay. So better always try to book profits, or at least trail your stop losses to protect your profits. Or otherwise, if the market is not good, or if the market is sell on rise, you can just start selling the particular things also. Definitely you will get good amount of money in market. Then set your profit targets, as earlier I have said you, and then stop losses also before you start trading. See, I have seen many people why they lose money or why they fail into market. Basically, the first reason is they don't put stop losses. I'm talking about the traders. No doubt investors are also there, but in investing, always the stop loss will be also bigger. It is not like the kind of a 1% or 2%. The stop loss may be of 5 to 10% or maybe 20%. But still, if people are not keeping stop losses, definitely they will end up losing money in stock market. So you need to set your targets also. See, ratio will be anything like 1:2, 1:3, 1:4, 1:5, whatever technical parameters you are using, that will give you the we can say proper ratio also. But some ratio you need to keep in mind while trading in the market. And then stop losses. Many people say, sir, stop loss लगाया था. Where? Sir, दिमाग में रखा था, mind में रखा था. So that stop loss is of no use. You need to put a stop loss in a system. Okay, many people says कि हाँ, I'm watching market and stop loss is in my mind, but I can assure you those people will never able to sell. Okay, because they have not kept stop loss in system. They have kept in mind. Every time whenever there is a fall, they'll say नहीं नहीं अगली बार तो बढ़ेगा, I will use. अगली बार तो बढ़ेगा, I'll wait. Okay, so you need to put a stop loss in system and not in your mind. And last, we can say all companies in sector are not star companies. So मैंने जैसे बोला कि the pharma sector is doing good. So that doesn't mean कि okay, Biocon is doing good. I'll just take the names. Again, a disclosure is I am not having any positions any of the stocks which we will going to discuss in next 1 hour. But just for the sake of understanding purpose. So Biocon is not doing anything for last many years. So that is not the case. It is just a cheap available at 270. So just buy the Biocon. It is not like that. Sometime you will see the Aurobindo Pharma will be the good stock to buy for intraday because it is moving nicely. Okay, so that you need to decide. So all companies in a sector are not the star companies. You need to identify those few stars in those sector, and then you can start your trading process. And whenever the market falls, just like 2-3 days back, we saw that market was up by 150 points in Nifty, 170 points, and suddenly there was a drop of more than 400 points in a day. At that time, certainly everybody must have remembered this scene in Mahabharata. Like anybody can tell me which is the scene? Like ये सूर्यास्त क्यों नहीं हो रहा है? At what time Duryodhan said this? ये सूर्यास्त क्यों नहीं हो रहा है? Acha, there is no directly. Okay. So if you remember that is at the time of the Jayadratha, like when Arjun was eager to kill Jayadratha, and
Yes.
at that time he was saying, "ये सूर्यास्त क्यों नहीं हो रहा है?" And like bulls also see, ये 3.5 क्यों नहीं बज रहे? Because the market is falling relentlessly. Then everybody says कि ये 3.5 क्यों नहीं बज रहे? Okay. So that thing happens with bulls also sometimes when market falls. Just last week also we experienced this. So this is the emotion of a bull when market crashes. Now, second thing, if you want to do some positional trade, you really you need to see the disinvestment programs. I can tell you, a few years back, you must have seen 1 2 years. That was what we can say a major trigger whenever the government announced any disinvestment program, and you saw that there was a good rally in that particular stock in next few months. Okay, even Hindustan Copper is a good example. We can say that the IPO was came at 70 rupees, and now the stock is trading at 250 plus 250 more. Okay, so that disinvestment program is also we can say some kind of a hint that if the government is coming out with the stake sale, definitely, no doubt, they are selling stake because of they want capital. But sometime this is a logical. If you see most of the disinvestment program in the past. Every time whenever this program announced and whenever there is a disinvestment in particular stock, you will find that stock has rallied by more than 100% also sometimes in next few months or next few years. Watch promoters credential also. Satyam cannot be Sundaram. Okay, now why promoters credential? That this point you can use is for investment purpose also, but for even positional trade also, you need to see which company you are buying, who are the promoters. Okay, like in Ambani's also there are two brothers. Definitely you will like to choose which one. I should not tell you. So Satyam cannot be Sundaram means everything. As I said, every time it is not like the only your surname will help you to find like grow. मतलब जैसे ने बोला कि अंबानी there are two brothers, but we saw what happened since 2011 till today. One brother is nowhere and one brother is everywhere. So you need to see the promoter's credential also before going ahead with the kind of we can say short term trading or maybe positional trading. Then be aware of high return scheme where capital usually is not protected. Many examples of multi-level marketing and Ponzi schemes. In many, even when I stay in Thane last 2 3 years. Actually, I visited EOW office also twice in last 2 years because there was a small scam in Thane also. One of the lady in Thane who assured people that she will give 5% every month, and many higher middle class people they invested some money with her, and then after 6 months as usual she closed her office and she was absconding. So that thing happens ki people when they come out with such what we can say high return schemes that they will give you 5%, they will give you 10%, they'll give you to 3%. See, if it is so simple, if someone comes to me and asks ki, sir, I'll give you 5% every month, I'll simply say, then bhai aap kamao na, then you should earn it. Yeah? You should not come to me. I am a happy person if I am able to make 15 to 20% or so per annum in markets. I am damn happy because the banks are giving hardly 5 to 6%. So anything above like a bank investment, bank interest, or maybe twice or thrice of bank interest, I am happy with that. So most of the people they go after this because their nature is greedy. They go after these schemes and they lose their capital heavily. So even many chartered accountants they must have their client few clients also who has lost their money. So as a chartered accountant, it is our duty to make aware our clients also that never go behind these particular schemes that will never going to help you out. The problem is most of the chartered accountants came to know only after the things happens and they come to you with their return, and in they will show you the loss return or they will show you the losses. But my opinion is we should always talk with our client during the year also ki what they are doing, if they are a trader or if they are doing investments in market directly, then we should always have a conversation in at least in every month or maybe every quarter, that we will come to know ki what he is or she is doing exactly. Okay, and we can guide them at least their money should get protected. Then most of the thing, as I said, decide what you want to play, test match or 2020. Like intraday is just like a 2020. Test match is short to medium term investment. So that you also need, because many of the times what happens is people enter into market for an intraday trade and the stock comes down, then they say ki no, I'm a positional trader. Then after positional trader, stock falls by another 5 to 10%. Then they say I'm a medium term investor. Then after another fall of 5 to 10%, they say no, I'm a long term investor. So that what we can say, changes took place with particular person, because they have never decided what exactly they want to do in market. So just because the stock prices are going down, they say ki I'm not a like trader, now I'm a short term trader, now I'm a medium term, now I'm a, and ultimately they end up as a long term investor. And I personally believe most of the time 90% of the long term investors are trap traders. I personally feel, this is my own opinion, only 10% of the investors are genuine investors. They really buy some stocks with the intention to keep with them for a longer period of time, because otherwise 90% of the investors, they are trap traders. Okay, ultimately they become investors. Now that is my own sense, like that is my own observation. Your observation may be different. Now this is the nature of market. Okay, dhoka swabhav hai mera. You have to remember this slide whenever you trade in market. Okay, because most of the time, whenever you see any breakdown or maybe a breakout, always keep in mind dhoka swabhav hai mera. Okay, and as what I have learned in technicals in the year 2006, that my guru told me that technical analysis also most of the time gives you success nearly 60 to 65% of the times. 30 to 35% of the times it may go wrong also. Okay, it is not like 100% it will give you success. That what my guru told me in 2006 when I learned my technicals, that 60 to 70% technicals will be right, 30% there has to be a failure in technicals also. Then we call it them, that breakout is a what we can say, matlab properly nahi tha, and that was a matlab sometime misleading also in market. So this slide you need to remember, dhoka swabhav hai mera. Market is always market or maybe the stock will always tell you, okay, every second, every minute, every hour, every day, that dhoka swabhav hai mera. And in that environment you need to trade wisely. Okay, so that is a slide you need to remember. Dhoka swabhav hai mera. So don't go blindly anywhere in the market. You just set your targets and put your stop losses, and always trail your stop losses to have a good amount of profits in trading. Some trigger points in markets, I can say ki whenever you will just like with the help of technicals, you will also we can say anticipate what will happen in next month or maybe next quarter. Like some trigger points are also which will help you to have a good, we can say, quick profits in a very short time, short span of time. Like first is a monsoon expectation. Now see, again I'll say ki the on the television you will always now since from the month of April, this monsoon expectation will come. And usually see, my observation for last 15 to 16 years is, first time they will say ki this time monsoon will be 98% of the normal, or maybe a 98% to the normal expectation or normal monsoon. Then market may fall. Then again market will fall. They will come with the another prediction after 15 days. Oh, now there is a good prediction, and now the maybe the rain will be 105% of the normal monsoon. And suddenly you'll see there is a huge, what we can say, surge in market. And after 1 month again actual monsoon starts. Then 5th June there is no rain. 15th June there is no rain. 20th June still there is no rain in Mumbai. And then they'll come again ki no, that was 105, wo galat tha. Now the again monsoon will be 95% of the normal monsoon. Again the market will fall miserably. So these expectations also sometimes decide the, what we can say, the when where the market will move. And one thing you need to understand in market is, if you are if you are using a technical, or maybe if you are using any other parameters, trend is my friend. One line you need to remember: if you are a trader, trend is my friend. Okay, you just observe where the trend is going. If it is going up, you just buy. If it is going down, either you exit or either you short. Okay, so after monsoon expectation, you will definitely see the surge or maybe the breakdown. So that you can use for your quick profits or maybe the quick trades. Inflation record, WPI, CPI, this is also a game changing. Sometimes ki if the it is falling, then definitely some anticipation ki definitely rate cut will be there. Now last 2 years we are going through the rate hike cycle. Okay, even in US also we saw the rate hike from like 2% to almost 6%. So almost 0% to 4.5%. So almost 4% rate hike was there in US itself. In our country also we saw almost nearly 1.5 to 2% rate hike. And now people are saying ki the 2024 year, or maybe the second half of 2024, we may see a rate cut cycle again. So that is the anticipation. But when definitely when the inflation will be in control, if the inflation will not come in control, you may see the rate hike cycle may continue for another 2 or 3 quarters. So that also is a trigger point. Who those who are trading in Nifty, Bank Nifty, that normally RBI policy day you will see a big swing, or most of the time next day there will be a big swing, because everybody, if they go with the same intention, it may happen market will never give you the correct results or correct picture. Next day definitely you will see a big move in the markets, in Bank Nifty especially, after the announcement of inflation data. International events also you need to see, because nowadays we are going through last 2 3 years we are going through this geopolitical concerns. Okay, every time there is a news comes, there is a missile attack from South Korea, there's a missile attack from China, Taiwan, and all these things are going on. Iraq, Iran, like everywhere we are listening that some missiles are fired, and then suddenly market collapse by 100 to 200 points also in a day. So international events we need to we can say observe, and being an intraday trader you need to see where the Dow closed yesterday, then what the European markets are doing, and what are the futures of Dow today, for tonight. So that things you need to observe while going for a intraday trades also. So international events also very important, because see this definitely have some impact on our index. Okay, ऐसा नहीं है कि though I know the concept we call it market as factored in, okay, but that factored in concept is normally used as per our own, what we can say, like own side, like जैसा मुझे लग रहा है तो मैं बोल दूंगा कि now market is gone up, okay, market has factored in, market has gone down, no problem, market has factored in. So the only one line they come with, market has factored in or market has discounted it. Okay, just like before Gujarat results also, there was a big hype. If this time BJP will come, market will boom and all that. But you must have saw that after Gujarat result, there was a fall in market. Okay, so everybody was hoping after Gujarat result last year, market will go tremendously well. But actually, it came down after the results, because that was factored in market. Okay, so now again I personally feel that everything is factored in. 2024 definitely Modi Sarkar will come, they may go with 400 plus. But suppose, just imagine if it doesn't happen, then where the market will go. That you need to keep in mind this point also, because if it is 400 plus, definitely market will not going to rally much, I personally feel, immediately. Okay, after the results it may rally in 2024, no doubt, but not immediately, because that is already factored in the market. Like definitely Modi government will come again, but suppose if the seats will come below 400, though they will get a majority, but below 400, then what will happen? Whether that is factored in, like that we need to understand. Then MSCI inclusion exclusion, that is also that Morgan Stanley index, everybody knows, though every time there will be some inclusion, every month there will be some inclusion, every month there will be some exclusion. So whenever there is an inclusion, you will see that some flows will come, those stocks will definitely, but again not on the same day or next day, it will come, that move will come after 2 3 days or maybe after 7 8 days. So that you need to observe when this move will start. Okay, so this inclusion exclusion also is a trigger point for a particular stock to trade. Then dollar movement is also very much important. You have to see where the dollar is right now, what is the move in dollar, what is the crude oil is doing, because most of the time, if crude is increasing, then all these refineries will do well, like ONGC, Reliance, okay, Hindustan Oil Exploration. And whenever the crude oil falls, then we see that the stock like paint stocks will do well, these OMCs will do well. Okay, then this Indigo will do well, because the prices of crude are gone down. So these things also will help you to identify the stocks and to trade in the particular market. Then quarterly results are also very much helpful if you are a short-term trader. If you are a like medium-term trader, definitely quarterly results will have an impact. most of the time it happens because in last few days also we have observed when the results are excellent, stock has gone down, the stock has come down, and when the results are not so good or maybe so, and the stock has moved rapidly. Okay, there are multiple examples in last 8 to 10 days. So again, people get confused कि what is happening यार, जिसका रिजल्ट अच्छा आ रहा है वो स्टॉक नीचे जा रहा है, और जिसका रिजल्ट एकदम खराब है यार ये तो 10% चल गया 2 दिन में. So these things happens in market. So again, जैसे मैंने बोला, trend is my friend, that principle you need to use, but definitely quarterly results will have some impact on a particular stock price. So most of the time, my personal opinion is whenever there is a result day, I usually avoid that stock for intraday trade or maybe for option trade. Just another example, I can name you that ACC stock. The day before yesterday there was a result, and you must have seen that stock price was 2370 initially in the morning, went to 2563. Okay, and then again it came down to 2460. So that was a huge movement because the results were great, and the stock is also moved in the same direction. So the price movement was really excellent, and calls were also run dramatically. But I avoid that stock particularly because why? My own principle is just being to trade safe. Usually I avoid those stocks which are having a results on a particular day. So अभी उसका result आ गया है. If I want to trade in SEC, I'll see on the Monday or maybe on Tuesday, and if possible I'll trade. Otherwise I'll leave it. Okay, because already the move has come. Then I'll just leave it the stock and I'll go for another stock. Okay, but you need to watch also because ऐसा ना हो जाए कि you have taken a position, very next day there was a result and then stock fall miserably and you say अरे यार कल इसको buy किया था 10% गिर गया. So that is not the right time to buy. Sometime if your calculations may go wrong, if the results come otherwise. So basically avoid trading on that particular day. Just wait for 1 or 2 days if you want to take a positional trade. And if you are an intraday trader, still you wait for that day, and another day you can have an intraday trade. No problem. That is my own personal opinion. Then in two-wheelers also, four-wheelers, monthly auto figures are very important. Commercial vehicle that usually comes on first day of every month, and you see there is a good movement in auto stocks. After if the numbers are better, definitely there will be a good move. If the numbers are not up to the mark, definitely you'll see some pause or maybe some consolidation in those particular stock. But right now, if you see, most of the stocks are doing well in auto sector. Like Tata Motors also now is above 800. Earlier we saw Tata Motors at 500 also few months back. Eicher Motor is also doing good. Hero Motor is a good, what we can say, or Bajaj Auto is a good, we can say, has given a great kind of a returns in last 6 months, or basically in last quarter also we can say. So those stocks you need to identify. The Maruti is also not doing good for last few days. Once it reached to 10,800 and then it came down to 9,500. Now again it is at lagging at 9,700 to 10,000 levels. So that you need to identify, and accordingly you need to take your own trades. Acquisition of Stexel news also is very important. If you are a positional trader, sometimes you need to see who is who is the company who is acquiring which company, whether it will add to their revenue, whether it will what we can say anything there is a, we can say, benefit out of that. Definitely that stock will do well. Sometime, most of the times you will find that stock gets huge gap up also. Open said huge gap up. Then the traders may lose opportunity. Then you need to wait to, what we can say, the price should come to the buying level, or it will definitely sometimes come to your buying level. That retest concept is also we have seen in earlier, what we can say, session, that definitely after a gap up, stock will definitely come down, and then you need to see whether it is retesting the level and again going up. You can enter into that particular stock. Definitely it will give you a good amount of returns in very short span of time. So that you need to identify. Then basically pledging of shares by promoters and unpledging. Now currently that scenario is not there as much, but few years back I still remember nearly 4 to 5 months market was moving on this particular news only. Every day there was a news. Some promoters have kept shares at a pledge. The stock was we saw the fall by 20%, sometimes 30%. Huge fall is 40% also we saw in some stocks. I can name them, like Jindal Steel was a particular case. We saw stock fallen from 250 to 100 levels after this news few years back. Now Jindal Steel is at 600 plus levels. But these are the sometimes very important, what we can say, you may call it a fundamental, but definitely maybe a short term, the stock will definitely give reaction. Like if it is unpledging, like the promoters have unpledged the shares, so it's a good, like stock will definitely move up. And if they are pledging their shares, means company is definitely in some crisis, definitely some cash flow is affected, so then stock may fall also. So that also one of the thing you need. Nowadays this is a very rare occasion. I have not seen many like examples in last few months, but a few years back there was a huge, what we can say, huge kind of a comparison index also. We saw huge amount of news on pledging and unpledging. Then group company IPOs, industries IPO, this is also good. We can say for a short-term trader, you need to identify which company is coming with the IPO, which group is coming with any IPO, industry IPO. What are they doing? What are the like? Then sometimes you can use that P multiple and all these things for calculation purpose. And if the IPO is, if you feel IPO is priced, say comparatively cheaper, then definitely you can go for that IPO. But nowadays I think the IPOs are what I personally, I don't invest in any IPO. Being a technical person, I always wait for 6 months to 12 months, let the stock trades in the market, and then if at all I want to trade, I take my trades. So normally, but I'm not a kind of a fond of IPOs, but still if somebody asks me, sir IPO क्या करना है, तो I usually say, भाई मैं तो IPO में पैसा नहीं लगाता. If you want to invest, just see, then you need to study a little bit hard. Okay, some fundamentals also you need to check that price, मतलब कितना सस्ता है, whether something is available to the traders or so available to the investors, or the already it is priced, kept is at very high P multiple, then definitely one should avoid that IPO also. Okay, that we need to study. Understanding block deals, that is also a great opportunity for intraday traders sometimes. But the only thing is you need to see who is a buyer and who is a seller. If the earlier there was a scenario when FIs were seller and DIs were buyer, stock used to fall more. But now the scenario is reverse. When the FIs are seller and DIs are buyers, sometimes stocks moves very well. Okay, so that also you need to understand. And the final trigger I can say is a union budget. Now, as we know very well, on 1st of February, we are coming with the interim budget, or we can say vote on account. It will not be a full budget, but definitely the full budget is a major trigger for sectors, for stocks. We can say sometimes they become a game changer also. So that is a big trigger for market, because what will happen in next year, you can simply identify. You can simply, at least you can work out which sectors will do good, what facilities are offered by government for that particular sector, or anything has some duties are levied, or some taxes has been levied, then definitely that sector will get affected. Then next one is general do's and don'ts. Indian markets always overreacts. I personally feel it is just like Kiran, that particular actor I usually see sometimes. So I just correlate these things with that particular actor. So always we'll see overreaction in market. Some news. Now I personally feel what the HDFC is currently doing is a overreaction. I personally feel. Okay, maybe your opinion is different, but I personally feel whatever fall we have saw in HDFC Bank currently after the results is nothing but simply the overreaction. Okay, so myself, I am adding a very small quantity in every dip. I 1480 was a price when I added only 10 shares, like very small quantity, but I just wanted to confirm whether it will wait, whether it will stop here, or whether it will sorry, 1480, 1380 was a like that low. Actually, I got it because my price was 1381 rupees. So that day I got 10 shares, and now it is moving 1440, 1450. So if again it will fall to 1380 and then 1350, 1330, as a portfolio, I'll definitely going to add this HDFC Bank. Okay, though my forte is a trading, but sometimes a very small quantity I buy in my wife's account, where I maintain my own portfolio. So my personal feeling, any dip in HDFC Bank, definitely for a medium to long term, it is a good investment. And what currently we are observing is simply it's a overreaction. That is my opinion. I may go wrong, but definitely because HDFC, I personally feel now is the greatest or largest bank in private sector after the merger also, and it was a largest bank, and it is having a great weightage in Nifty. And hence we saw a big fall in last we can say a week time after HDFC result, because HDFC is having more weightage in bank Nifty. Okay, almost highest weightage in bank Nifty, and hence bank Nifty fallen. So always trade or invest through authorized brokers, or better do online on your own. I personally do online, but I have choose one broker. I have a demat account in one of the broker for last 13 years. So always go with the go. I am not much we can say comfortable with the discount broking, or maybe the apps nowadays available in market which are very cheap or no brokerage or zero brokerage. I personally feel, see, we are professionals. When we give services to our clients, हम लोग तो मुंह मांग के कीमत लेते हैं, because we are giving service. And when we are sitting on another side, we want everything free. We want low brokerage, we want free brokerage. How this work out, I don't know. So I personally feel, let my broker charge me whatever he wants to charge, because he is giving me good service. I am ready to pay him the price. Okay, but normally a usual middle class person, or maybe some lower middle class, or maybe they nowadays I see why these companies like Zerodha are basically doing great. They are having 60 lakhs plus customer, because zero brokerage, 20 rupees lot, and all these things. But my personal opinion is, out of that 67 lakhs, hardly 2 to 3% are making money in real terms. Okay, so one thing you should be very clear about in your mind, that brokerage or we can say brokerage criteria is not the, we can say, the criteria which will decide whether you will going to make profits or losses in market. But most of the thing ये mind game है, बहुत जन का psychology होता है कि cheap brokerage I'll make money. Definitely they lose more, because they trade aggressively sometimes due to lack of brokerage or less brokerage, and they pay heavy prices. Instead of that, I go for a good amount of we can say my broker is charging me good amount of fees. He's charging me 100 rupees lot, whereas a few brokers are charging only 20 rupees lot. I know, but why I'm still paying 100 rupees to my broker? Because services I'm getting, software, it never hangs actually. Okay, it never hangs. अगर NSE का website down है, then only my software will stop. Otherwise, my own broker is give me proper service. So let him charge 100 rupees, no problem. If I am making money, I am ready to pay 100 rupees. So that should be the criteria in our mind. Because many a times I saw कि people say कि sir वो सस्ता वाला broker अच्छा है, but I say भाई कितना पैसा बनाया तूने उधर? नहीं sir, पूरा loss ही किया है. Then what is the use of that सस्ता वाला brokerage? So that should not be the criteria to decide whether you are going to make money or not. The criteria should be your own studies, your own capabilities, not the brokers. So make use of data on NSE site. Keep updating yourself with market conditions. As I said, I am personally using the NSE data. As I said, I am not using technical parameters very more. I personally go with the NSE website, and just I see the concepts are very similar, like what you see breakup or breakdown, or maybe a breakout in charts in candlestick pattern. I see in like what is a quarterly high, what is a monthly high, what is a daily high, what is a weekly high. Okay, if that figure is crossed, and so it is the stock is also closing above that price, then definitely that stock will move ahead. And if the stock is fallen below weekly high, fallen below or closed below weekly high, closed below monthly high, closed below quarterly high, closed below 6 monthly low, what we can say low, then definitely that is a good shorting candidates. So I use data analysis. I use data which is available on the NSE site, and which will definitely help us. And because I personally sometimes feel ki too much complexity in technicals, because our fellow member also said ki he is using only 2 or 3 parameters. There are n number of parameters in technicals. The problem is we get confused which parameters we should use. So to avoid this, I simply use just NSE website, and I just I have prepared my own software where I have kept quarterly high, 6 monthly high, yearly high, weekly high, daily high, and daily lows, and accordingly. वो break हो गया, that is a signal for me. I'll start trading in that particular stock, where it will means according to the trend of the particular stock. Do set your own targets for profits to earn and fix your stop losses as per your risk bearing capacity and follow them with care. Now, this is a very important point. But as I said, most of the times I have seen people, they keep stop losses in mind. They don't put stop loss in system. That is the main problem why they. And then what happens? This is the thing. What happen if you don't keep stop losses? लड़का ट्रेडर तो अच्छा है मौसी, पर स्टॉप लॉस नहीं लगाता. Hey Ram, then what is the use? Okay, so this reminds me the Sholay movie, Sholay movie in which the Viru का रिश्ता लेके गया था. Okay, and he was talking to Masi, and आपको तो पता है सबको कि how he explained how Viru is good. Okay, so the same I remember. लड़का तो बाकी अच्छा है. Okay, the people are very good, but the only problem is they don't keep stop losses. Then they are not traders. If they are not putting stop losses, then definitely they are not going to make money in markets. Okay, लिख लो मेरे से. Now, what are the do's basically? Then always keep in mind stock market moves ahead of news or fundamentals. Many a times it happens that people watch television channels, business channels. I don't say that it is not good, but what happens is whatever news comes on television channel, क्या आपको ये पता है कि जब भी वो न्यूज टीवी पे आता है, that news is already in the market maybe 24 hours before, maybe 1 week before, or maybe 15 days also. There are a few people in the market who knows that news which will come at least 15 days to 1 month also, and accordingly they position themselves. And whenever that news comes, they will come with the what we can say, they will come to sell because they have already taken a position accordingly. So those people who only watch television channels, business channels, and they go with this recommendation, I personally feel 7 to 6 times they will fail. Okay, 3-4 times they can make money, but 6 to 7 times they'll fail. They'll never make money. So always market will run above that. Okay, market moves ahead of the news and fundamentals. दो चीज आपको अभी पता चल रही है, वो मार्केट को पहले से ही अंदरूनी पता है. So that you need to keep in mind, okay, because suddenly the news will come. L&T backs contract worth rupees 4,000 crores. Okay, but वो भाई L&T ने जब भी टेंडर भरा होगा, मालूम तो होगा किसी को. मार्केट में भी बहुत जन को मालूम होगा, वो तो अपने को मालूम नहीं था because we are watching television channels. मुझे अभी पता चला कि, and you will find that in last 15 days L&T has already run up by 200 rupees. And after this news, you will go for intraday trade. आप 500,000 शेयर लेंगे L&T का ओवर लिवरेज पोजीशन, वो 10 रुपए ऊपर भी जाएगा, 20 रुपए ऊपर भी जाएगा, एंड यू विल से माय ट्रेड इज परफेक्ट, एंड देन सडनली यू विल सी अ बिग प्रॉफिट बुकिंग एंड दैट स्टॉक विल फॉल बाय 50 रुपीज. ये होता है मार्केट में. आई हैव सीन इट हैपेंस मेनी अ टाइम्स. ओके, सो ऑलवेज बी केयरफुल. Don't take your decisions on the basis of news which are come out on the television channels or maybe in the newspapers. It's very difficult to time the market. I know, but still you can try. Okay, you can try. I know it is very difficult to time. Very rarely you will able to time, but still you have to try yourself to time the markets. And definitely if you follow certain principles, you can time the market. Okay. Then another principle is buy on rumors, sell on news. As I said earlier, ki people buy on rumors, and whenever the news comes on the television or maybe in the newspaper, they just sell the particular stock and they book the profits. So always this is a good tactics, buy on rumors and sell on news. This is a usual phrase used in markets also. One must know this, and accordingly one can trade. Well, professional advice services, if you don't have, find time to do studies. If you have time, just like me, then you can do your own studies. Okay, otherwise you can have a professional advisor. There are lots of people in the world, they are giving their advices. They are SEBI registered advisors, so you can go there and you can get their services done. Okay, but otherwise my personal opinion is I do my studies individually. I do my own studies. I never go for any professional advice. Since first thing, we are all professionals, we are chartered accountants, and if we study, if we get time, if we find time to study, then definitely nothing like that. Okay, we can use our sharp brain into this. Definitely we can make good amount of money. So and sometime if you need some help, you can always call your friends which are professionally doing these things for a longer period of time than you. Then definitely you can have their advices. But otherwise, do your own studies. That is what we can say, message I want to give. Be Atmanirbhar, whichever Prime Minister, the learned Prime Minister, Honorable Prime Minister has also given us a message. Be Atmanirbhar raho. Okay, don't remain dependent on anybody else. Give time to grow your investments. Every fall in market is a buying opportunity. Now, this is also for investors ki always wait. Like SIP people, they say ki wait for 10 years, 15 years, your returns will be multifold. Now, that is true, but there are some exceptions also. What happened to the infra companies which were bought in 2009? All those SIPs, now they are at hardly 5 to 10% of their investments. Fallen miserable in last 10 years. Okay, so you need to again, you have to check your investments. If you see that your investments are not growing, immediately you need to shift those investment to something else or some other funds. Okay, and every fall in market is a buying opportunity. Yes, definitely for investors is a buying opportunity, but it is not like you have to do average. Okay, if you are a trader, don't average any stock. My personal opinion is, if you are a trader, don't average any stock. See, buying a stock at a lower price is, or averaging a stock at a lower price is really a mistake you are repeating. Okay, already I have bought one stock. My studies told me that this stock will move up. I have bought it, and then I saw the stock is falling down. That means my studies are not correct. My studies are wrong. But we become emotional. We say, नहीं नहीं, my studies are correct. I'll buy that. So 100 rupees stock था, मैंने 1000 क्वांटिटी लिया, 90 रुपया हो गया, मैंने और 1000 लिया, 80 हो गया, मैंने और 1000 लिया, 10 रुपया हो गया, मैंने 5000 लिया. The example is Suzlon. There is no need to say, okay, though now Suzlon is again come back to 40 rupees, 45 rupees. But just imagine, very rarely people must have hold their 100 rupees buying. Okay, so the problem is, don't average in falling. If you are a trader, never average any position. If you are a trader, never average any position. That will definitely will have a big injury to your capital. And then this picture will come. हाँ, buy on every dips करके थक गया हूँ, चैन से सोना चाहता हूँ. Okay, so buy on every dip. If you keep on buying on every dip, and the dip will come again and again, again and again, your money will vanish. Okay, your money will finish, but the dip will still continue. So means you are on a wrong, you are in a wrong stock, boss. You are in a wrong trend. The trend आपका गलत है. So you should not average. So my own opinion, if you are a trader, if you are an intraday trader, if you are a positional trader, whatever it may be, if you are call yourself as a trader, never average any position. What is the correct averaging? Correct averaging is, if you bought at stock at 100 rupees, now it is 105, 106, you can add some quantity. If you are a short-term trader, if you are a positional trader, it becomes 110, you can add another few quantity because the trend is rising one. So that average is good. But it is not like 100 rupees, you bought some shares, it become 95, you added, it become 90, you added more. That is not the correct way of averaging. So average should be on a, when the prices are moving up, that is the time to average the stock. Okay. Now what you should avoid in market, basically, don't see what others are doing, do what you want to do. Don't follow masses, go alone. That is a very simple advice I'll give you, that don't see what others are buying. अरे मेरे दोस्त ने ये खरीदा, मेरे दोस्त ने वो खरीदा, मेरे ब्रोकर ने ये बोला है, पूरा गांव वो खरीद रहा है. Don't do that. Okay, do your own studies, find out which one is good one in particular sector. The sector is doing good, you decide what to buy, and accordingly you just follow the your own studies. Okay, don't follow masses, go alone. That will definitely give you good money in markets. Do not believe in false promises or invest for high returns. Already we have discussed. Do not believe in SMS you received. Earlier we used to receive some unsolicited messages also, and the problem was the messages were sent by those softwares, and the names were also resembling to our own brokers. थोड़ा उनके स्पेल में थोड़ा सा चेंज करके वो मैसेज आता था. वी फील कि यार ये तो मेरे ब्रोकर का मैसेज है. ओके, सपोज आई एम हैविंग माय अकाउंट इन HDFC लिमिटेड, तो वो HDFC के बदले HDCF या HDFD करके मैसेज आता था. मुझे लगता था अरे ये तो मेरे HDFC का मैसेज है, चलो ले लेता हूँ मैं इसको. So that things were happening earlier, but now there is a control. SEBI is also having some control on those unsolicited messages. So now those messages are not coming for last few months, but earlier these things used to happen. So never believe in such kind of a messages, or never believe in such kind of a YouTube links, or we can say what we can say that Telegram channel links where they will show you some fake pictures. We earn 50,000 in a day, we earn lakhs rupees in a day. That all are fake actually. Even I have seen many people, they join those channels and they also lose money heavily. Okay, so don't go behind these all these things. Just do your own proper studies and see. Market is rewarding. Definitely, market is rewarding to those traders who are following discipline. So if you are a disciplined trader, market will reward you. And if you goes wrong, there is a stop loss. Definitely, your losses will be minimum. So always do your own studies and go with conviction in the market. Don't be greedy. Don't be fearful in market. That is also one of the important thing. If you are an intraday trader, as I said, I am an option trader. My target is 5 to 10% of premium, not more than that. Let the premium goes double or triple. Like yesterday, I saw that ACC call from 30 rupees, it went to 200 rupees. You can also check it out. 2400 February call, the low was 36 rupees and it was high was 200 rupees. So multiple times it went up. No, but problem is 36 rupees में लिया है, किसी ने 45 में लिया है, 50 में, where he should exit. I personally feel I will exit in 55 rupees. 10% on premium is more than sufficient. हाँ, गलती से अगर 10% भी आ गया, 20% भी आ गया, I am more happy. I'll avoid trading for next day. कि भाई चलो 2 दिन का पैसा कमा लिया मैंने. But normally what happens is people wait. they बोलते हैं नहीं आज तो मैं इसको दुगना करूंगा पैसा, मैं उसको 3 गुना करूंगा. Very rarely 1 out of 100 times or 1 out of 1000 times it will happen, and the remaining 990 times you will lose money. Okay, so don't be greedy and don't be fearful also. As I said, if the particular premiums are coming down, just put a stop loss. Simple. See, if I'm ready to book profits of 5 to 10%, then I should have been I should keep my stop losses also maximum to the extent of 10%. भाई 50 का 45 हो गया, निकल जाओ. अगर 55 में मैं बेचने वाला हूं तो 45 में निकल भी जाना है. वेरी सिंपल. सो सच काइंड ऑफ अ डिसिप्लिन इफ यू आर एबल टू कीप, then only you come in market for a trading purpose. Okay, otherwise if you are only, you will say कि I'll only buy in 50 and I'll sell in 100, बाकी मुझे कुछ पता नहीं है, then definitely you will lose money. Okay, only one time in 1000 trades you will make money, otherwise there will be a permanent failure. And last but not the least, never take or give free advice. Okay, you don't give also any free advice to anybody, and never take any free advice. Okay, because we are professionals, we know the value of advice. So always as far as stock market is concerned, the restriction is you have to be SEBI registered advisor only, then only you can advise your clients, otherwise you cannot. So don't give or don't take any free advice. That is the important thing you need to understand. Now, just few points to remember. I wrap up in next 15 to 20 minutes. Be aware of attractive advertisement. Already we have discussed. Just don't go behind that. These things never happen in life. Okay. Once in a lakhs. Okay. The possibilities, only one person could have made money out of lakhs of people. So don't go behind that. Prepare own trading plan. Okay, whatever you have learned technicals, you have learned candlestick, whatever you have learned data analysis. Just prepare your own trading plan. Okay, don't see everywhere, don't see here and there. Just prepare your own trading plan. What you want to do in markets, what you exactly what is your exact expectation from market, whether you are an intraday trader, whether you are a positional trader, or you are a short-term trader. What should be your target to earn money, what should be your stop losses. पूरा ध्यान में रखो, follow करो, prepare your own trading plan. Then see what's the ground level reality also. Means before entering into market, you need to check what happening on the ground. Okay, what the markets are doing. Market is bearish and you will say कि नहीं मैं तो long जाऊंगा and I will make money. It is very rarely it is possible. Then you have to be very very professional. आपको वो stocks मिलना चाहिए जो गिरते market में भी आपको पैसा देके जाए. Okay. So if the market, the trend is not good, trend is negative, then you have to short, or otherwise just keep mum like me. Okay, when the trend reversal will happen, you can again come with your firing guns. Okay, as I said, I also keep mum whenever the market is falling, and whenever I'll see the reversal, yes, यहाँ से market reverse हो गया, I use PCR also. I check PCR every 15 minutes, and that will give me idea whether the market will change its direction or not. and if the PCR is increasing, then definitely I go with the some more lots in my own trade. But when the PCR is going down, I just simply wait. Let the PCR reverse, then I will enter into market. And that PCR may reverse sometimes at 12 o'clock in the morning, in the afternoon, or maybe at 1:30 in the afternoon, or maybe at 2:30 in the afternoon. I have to simply wait till that PCR reverse. Okay. So ऐसा नहीं कि मार्केट चालू हो गया 9:15 9:30 आई हैव टू पुट सम ट्रेड, आई हैव टू एंटर इनटू मार्केट, आई हैव टू ट्रेड समथिंग. नो, wait for proper opportunity. That will definitely give you n number of returns, n number of times also you can make money in markets if you wait for proper opportunity. ओके, सो प्रॉपर अपॉर्चुनिटी के लिए वेट करना सीखो, ना कि मार्केट चालू हो गया कूद पड़े मार्केट में, देखा टीवी पे कोई बोल रहा है ये स्टॉक ले लो, ले लिया 1000 क्वांटिटी. दैट काइंड ऑफ अ ट्रेड्स विल नेवर गोइंग टू हेल्प यू. You need to wait for a proper opportunity, and then you can buy 1000 quantity also, no problem. But your trading plan should be correct one. Knowledge is the key. As I said earlier, knowledge is the key. You need to acquire knowledge. You need to see. Now, many people ask me, sir, कौन सा book पढ़ना चाहिए? Sir, which book? See, in last 17 years, I have never read any book on markets. भाई सीए कर लिया, वो टाइम में बहुत बुक्स पढ़ा था, उसके बाद बुक पढ़ना वगैरह तो छोड़ दिया मैंने. I never use any economic times. I never read any economic times. I never read any newspaper, any damn newspaper. I just simply follow the screen. Screen always tells me what he is going to do. So you may get surprised after listening to my opinion, but this is what I am doing for last 16, 17 years. I am just a good observer. Being an auditor, I am an observer. I just observe the screen, and whenever it gives me signal, I trade accordingly. I never read any newspaper. I never see any business channel. I will never read any books also. Okay, बहुत बड़े बड़े. See, because what happened is when I learned my technicals in 2006, one of my guru told me in those time at that in our classes that remember Soman one thing, the people who teach technical analysis will be the billionaire and not the person who use technical analysis. अभी आज की तारीख में क्या चल रहा है आपको मालूम है? The people who learn, who teaches technical analysis, they are billionaires. I should not name anybody. But the person who are taking classes of technicals, they are billionaires, they are millionaires. People using technicals, very rarely they become millionaires, very rarely. And like that, the people who wrote book, it is a bestseller, they are millionaires. बट बुक पढ़ के कोई मिलेनियर हुआ है? मैंने तो मेरे 17 साल के करियर में मार्केट में आज तक देखा नहीं है भाई इसने बुक पढ़ी और इसने पैसा बना लिया. सो आई गो विद अ वेरी सिंपल लॉजिक. भाई बुक लिखना है तो पैसा बना सकते हैं, बुक पढ़ के तो पैसा नहीं बनेगा. सिखा के पैसा बनेगा, यूज करके बहुत कम बनेगा कंपैरेटिवली जो सिखा के बना रहा है उससे. सो आई जस्ट सिंपली फॉलो वन टेक्निक, screen, following the screen. Just follow the screen. Screen will tell you whether where it is going. PCR will definitely help me. PCR is put call ratio. Just for your understanding, I'll explain. PCR means put call ratio. So where the put call ratio is going, accordingly Nifty Bank Nifty will move. That is a simple, and 99% of the times PCR goes correct. Again, 1% there is a chance PCR may go wrong, but the percentage wise it is 99% of the time PCR will always give you correct idea where the markets are heading. Okay, as far as intraday trades are concerned. So basically knowledge is the key. So knowledge, I take knowledge from screen only. I don't read any books. I don't see any newspaper. I don't see any business channel. Strategy, don't keep changing. Many times people come and ask me, sir, what strategy you are using? I say, no strategy is the best strategy. So I don't use any strategy. I simply see कि भाई मार्केट ने मुझे बोला है मैं ऊपर जाना चाहता हूं तो जस्ट आई विल गो लॉन्ग इन द मार्केट. मार्केट ने बोला है मैं नीचे जा रहा हूं, भाई बेचो मुझे. देन आइदर आई मे गो शॉर्ट वेरी रेयरली, अदरवाइज आई विल कीप मॉम. भाई मार्केट नीचे जा रहा है, चलो थोड़ा घूम के आते हैं, आधा एक घंटा थोड़ा घूम के आते हैं, बाद में जब मार्केट रिवर्स हो जाएगा हम लोग ट्रेड करेंगे. सो आई डोंट, बिकॉज मेनी पीपल आई सॉ दे कीप ऑन चेंजिंग देयर स्ट्रेटेजीज. मतलब पूरी जिंदगी निकल जाती है उनकी इन चेंजिंग द स्ट्रेटेजीज. पहले स्ट्रैडल करते थे, फिर स्ट्रैंगल करना शुरू किया, फिर बटरफ्लाई में आ गए. अरे भाई क्या चल रहा है? एक तो ठीक से करो या फिर कुछ मत करो. ओके, सो द प्रॉब्लम इज इन, आई एम टॉकिंग अबाउट द ऑप्शन स्ट्रेटेजीज. तो प्रॉब्लम इज 1 लेग स्ट्रेटेजी करो, 2 लेग करो, 3 लेग करो, 4 लेग करो. अरे भाई कितना करोगे भाई? ओके, इससे तो ब्रोकर ही आपका अमीर बनेगा, आप नहीं बन पाओगे अनफॉर्चुनेटली. एंड इन माय ओपिनियन, अगेन आई मे गो रॉन्ग, इन माय ओपिनियन all these strategies are basically hedging strategies where your profits will be also limited and your losses will be also limited. See, if I am an option trader, I want maximum profits, so I go naked in the market. Like I go naked either short or I go naked long in markets. I don't use hedging strategies. अगर मुझे कॉन्फिडेंस है मेरे स्टडीज पे तो मैं पूरा लॉन्ग जाऊंगा, उसके सामने मैं कुछ भी हेजिंग नहीं करूंगा. और अगर मुझे पूरा पता है कि मार्केट गिरने वाली है तो आई विल गो शॉर्ट, उसके सामने कोई हेजिंग का जरूरत नहीं है. हाँ, but my studies should be perfect. If my studies are not perfect, if my studies are not good, I'll lose money. But the stop losses are there, which will help me to at least थोड़ा पैसा जाएगा, थोड़ा लॉस होगा, पूरा लॉस नहीं होगा. Okay, so stop loss is must, but you have to decide yourself what to do. So my strategy is not to keep any strategy, just see the market, just see the screen where it is heading. If it is heading above, it is heading up, just go long. If it is coming down, either go short or keep mum. Okay, that simple strategy I use. Then diversification. If you are a short-term trader, then you can have a portfolio also for like delivery-based trading. If you are doing, then you can diversify your portfolios. Like normally, I suggest people who ask me कि भाई 10 लाख रुपए अगर मार्केट में लगाना हो तो एटलीस्ट बाय 15 to 20 स्टॉक्स फॉर अ शॉर्ट टर्म. ओके, ऐसा नहीं कि 10 लाख रुपए लगाना है तो 2 ही स्टॉक में 5-5 लाख डाल दिया, भाई मिलेगा तो अच्छा मिलेगा, जाएगा तो तगड़ा जाएगा, ऐसा नहीं. यू नीड टू डाइवर्सिफाई. ओके, यू हैव टू डिसाइड योर. हाँ, उसका कचरा भी मत बनाओ. आई सी मेनी पीपल दे आर हैविंग हंड्रेड्स ऑफ स्टॉक्स, 200 ऑफ स्टॉक्स. भाई मुझे तो आश्चर्य होता है, भाई इतना कैसे ध्यान में रख पाते हैं वो लोग. यार मेरे को तो 10 स्टॉक ध्यान में नहीं रहते दिन में, और ये लोग 200 स्टॉक का पोर्टफोलियो बना के जीते. आई डोंट नो हाउ दे रियली मेक दिस थिंग्स. एंड वो भी अपना काम करते हुए 200 स्टॉक का पोर्टफोलियो है, काम भी कर रहे हैं साथ में, ऐसा नहीं कि पूरा पोर्टफोलियो ही संभाल रहे हैं. So that should not be the that is called too much diversification. In my opinion, if you are having a portfolio, if you are doing delivery trades, maximum 10 stocks, 10 to 15 stocks, not more than that. Okay, बहुत ही ज्यादा अगर आपको डाइवर्सिफाई करना है तो 20 स्टॉक्स इज मैक्सिमम. उसके ऊपर 21वां लेना ही नहीं है आपको. then only you will able to understand, then only you will able to monitor also ना. बस उसको मॉनिटर भी आपको ही करना है, तो जितना कम रखेंगे उतना अच्छा रहेगा. बट देयर हैज टू बी 10 to 20. ऐसा नहीं कि 2 ही स्टॉक में पैसा डाल दिया, 4 ही स्टॉक में डाल दिया. so that is also not good thing, because if market goes wrong, then definitely losses will be much bigger one. Okay, never put in all eggs in one basket. वही diversification का मतलब है. so that you need to understand. and risk reward ratio, that always you need to verify what is the risk reward ratio. If the market is open 300 point 400 points down, then at one place it may find support. See, very rarely it happens. If you see in markets, अगर 300-400 point gap down होने के बाद out of 100 times only 10 times market और नीचे गया है, 90 times तो वो रिकवरी हुआ है. Again, you have to use your logic, you have to use your historical data. You have to say कि ऐसे कभी हुआ था, कितनी बार हुआ था, that you need to check. and then you can say कि भाई 90% probability that market may reverse from here, then your risk reward ratio is better. ओके, हाँ, अभी वो पूरा रिकवर हो गया, 400 निफ्टी गिरा, खुला था डाउन और अभी 200 ही बचा है, एंड यू विल से कि अरे यार अभी तो ये ऊपर और रिवर्स हो गया, एंड यू विल स्टार्ट बाइंग, एंड सडनली इट में हैपेंस कि वो 200 से फिर 400 निगेटिव जा सकता है. सो दैट risk reward ratio you need to understand. And sometimes the technical tools will help you to find out the right opportunity to enter into the market, or we can say that data analytics also will help you. Like if it is closing above the price, if it is closing below the price, that will definitely वहां पे आपका risk reward ratio बहुत ही अच्छा favorable रहेगा. ओके, जस्ट ट्रेडिंग इन बिटवीन इज नॉट अ रिवॉर्डिंग वन. मतलब मैं जैसे बोलता हूँ कि पीपल रैंडमली बाय स्टॉक्स, मार्केट खुला ले लिया, अरे भाई देखो तो वो कहाँ पे है, वो ना ही कल के लो के नजदीक है, ना ही कल के हाई के नजदीक है, बीच में है. एट दैट टाइम द स्टॉक इज ऑल्सो नॉट एबल टू डिसाइड वेयर टू गो. तो दैट इज नॉट द करेक्ट वे और करेक्ट टाइम टू बाय दैट स्टॉक. You need to buy at least near a day's low or at least near a day's high. Okay, whatever like you want to do, maybe you want to go long or you want to go short, but that you need to at least आपका risk reward ratio थोड़ा बहुत ही बढ़िया रहेगा वहां पे. So that you need to consider. try to time the markets. As I said, ki it is not much difficult, but still you can time. Don't be emotional. See, I have seen many people who are emotional कि टाटा स्टील को मैं बेचूंगा नहीं. अरे भाई शादी करना है क्या उससे? I personally feel I am a trader. I treat stock as a girlfriend. I never marry with any stock. Okay, very blunt, we can say my approach is. I am not emotional. भाई वो स्टॉक है, उसको स्टॉक की तरह यूज करो. आपको अगर वो पैसा दे रहा है तो उसको रखो, नहीं दे रहा है तो निकाल दो. ओके, यहाँ पे इमोशन रखने की जरूरत नहीं है. इमोशंस घर पे रखो बीवी के साथ. स्टॉक इज नॉट योर वाइफ. ओके, सो यू इमोशंस वगैरह बाजू में रखेंगे, देन ओनली यू विल बी अ ट्रेडर. एंड इफ यू आर अ ट्रेडर विथ इमोशन, यू विल नेवर गोइंग टू मेक मनी. लिख के ले लो मेरे से आज. Learn to book losses. See, I have seen many people who are afraid of booking losses. नहीं नहीं सर, लॉस बुक नहीं करूंगा. सर नहीं, लॉस नहीं बुक करूंगा. अरे भाई, आज 5,000 का लॉस बुक नहीं करोगे ऑप्शन में तो कल 50,000 करना पड़ेगा. ओके, दैट थिंग हैपन्स. सो ऑलवेज लर्न टू बुक लॉसेस ऑल्सो. सी, if you are a cricketer, if you are a cricket player, you must be knowing that in every over you will get 1 or 2 loose deliveries where you can hammer, you can hit a 6. It is not like कि every 6 ball you will going to get a 6. Okay, 6 छक्के नहीं मार पाएंगे आप, लेकिन एक 6 तो मार सकते हैं ना. So you have to wait for that particular opportunity where the loose ball will come and you can hit a 6. So learn to book losses. Sometimes अच्छा यॉर्कर है तो उसको खेल के निकालो. लॉस है तो थोड़ा छोटा लॉस है, बुक करो, आगे चलो, नेक्स्ट बॉल की तरफ जाओ, नेक्स्ट ट्रेड की तरफ जाओ. That will definitely help you out. Buy as per your budget, avoid overbuying. That is a very important thing for intraday traders. Don't go leverage. Though your broker is allowing you to buy in number of quantity, don't go do that. Because अगर मार्केट किसी का सगा नहीं है. ओके, मार्केट किसी का सगा नहीं है. मार्केट किसी का नहीं है. So don't do that. Don't go leverage. Don't like as far as equity stocks are concerned, don't do overbuying because that will definitely hamper your profitability. If your suggestion, if your studies goes wrong and you are not able to keep stop losses, और अगर आपने stop losses रखा भी था, एकदम से fall आ गया. Nowadays this robotic trading, due to this you see 100-200 points 1-2 मिनट में निकल जाते हैं, तो वहां पे stop losses हिट भी नहीं होते कभी कभी. Okay, your stop losses may not get triggered. Then the losses will be very, very heavy. So don't ever buy extra quantity than your budget, than your own margin. जितना आपके पास पैसा है उतना ही stocks लिया करो इंट्राडे के लिए. Okay, if you are an option trader, still don't use leverage. Try to buy like if you are an option trader, I usually my own strategy is, अगर मेरे पास 1 लाख रुपया है, मैं ऑप्शन में लगाना चाहता हूँ, तो I'll simply make minimum 6 to 7 parts. So each trade will not be more than 15,000. Each trade will not be more than 20,000. Okay, so I can take 5 trades and accordingly I can plan out my profit or losses for the day. So this kind of strategy you need to use if you are an intraday trader. Do what you feel and not others do. Okay, जो बाकी दुनिया कर रही है उसको मत करो, जो आपको लग रहा है, whatever your sixth sense is telling you, whatever your mind telling you, just do that and let me tell you very honestly, दिल से करोगे, दिल से बात करके करोगे, you will definitely be a successful trader. But you have to keep stop losses. Don't be emotional also simultaneously. Patience is the key in positional trades. Yes, definitely. Positional trader हो, patience रखो, you will definitely get reward. But with proper stop losses. ऐसा नहीं कि पेशेंस मतलब स्टॉक 100 का 90 हो गया, 80 हो गया, 70 हो गया. अरे सर, वो आपने उस दिन लेक्चर में बोला था कि पेशेंस, तो मैं पेशेंस रखा हूं. नहीं, नॉट लाइक दैट. Patience, but with proper stop losses. Okay, do online trading to avoid confusion. Normally, many of the times I have came across one to my friends also. They told me that वो जो उन्होंने बात की ब्रोकर से, ब्रोकर को समझा नहीं, इन्होंने बाय बोला था, उसने शॉर्ट कर दिया एंड बड़ा लॉस हो गया. अभी बात में झगड़ा हो गया कि भाई कौन सच है कौन, तो बट ब्रोकर्स हैव रिकॉर्डिंग्स. सो उन्होंने बोला अभी रिकॉर्डिंग में तो उसने बाय बोला था बट इसको सुना ही नहीं दिया, तो द प्रॉब्लम वाज विद द ब्रोकर. बट ये होता है कि समटाइम्स वो कॉन्वर्सेशन में अगर गलत हो गया तो then the trades may be different. So better do your online trading. That is a most preferable thing. Terminology like stop loss, long, short, trail stop loss, margin, auto square off, BTST, STBT, etc. ये भी आपको सब मालूम होना चाहिए if you are a trader. Normally BTST is also good, but sometimes, as I said, if I am an option trader, I avoid BTST also as well as STBT. हाँ, equity में हम लोग कर सकते हैं BTST, no problem. STBT is not possible in equity unless and until you have a stock in your portfolio. And if all these things you will follow in market, definitely you can build this house or build a house like this where you can write down share market Chikrupa. Okay, this bungalow is near Badlapur. I have seen this bungalow on a Badlapur road. So you can build also this type of house if you are a successful trader, and you can name that particular bungalow like share market Chikrupa, the blessings of market. Thank you very much for patient listening. Thanks a lot.
So much, sir. With this, we would like to take some queries from our viewers. The first
Yes.
one from Sumit Jain from Jaipur. His
Okay.
query is on the day of expiry. Can we expect short covering every time?
No, not at all. See, again, as I said, ki, usually you will find that sometimes, means it happened already in history of the markets, or sometimes market go in much more deeper zone also. So ऐसा लगता है कि 2:30 के बाद रिकवरी आना चाहिए, अरे परसों तो आया था, लास्ट थर्सडे आया था, but it will never happen every time. Okay, sometimes it may go wrong also, and more selling also can comes in the last 1 hour, and market can go down also. So it is, see, as I said, market may there is no matrix as such. Okay, see, you have to see the situation. As I said, you have to see the PCR, where the supports are, where the resistance are. If PCR is increasing, means definitely market may reverse, market may some short covering will come, but definitely market may move ahead. Okay, but otherwise ऐसा आप सोच के मत रहना कभी भी कि एवरी थर्सडे जो भी होना है पहले 2:30 तक हो जाएगा और बाद में तो 1 घंटे में मार्केट को ऊपर ही जाना है. That never happens. Okay, it may happen 75% of the times, but 25% you will see market will fall more. It also happened already.
Thank you so much for sharing your valuable insights, sir. With this queries and with this session, we think that the session has come to the conclusion, and we would like to extend our vote of thanks. I see a Tanushree Lekha, moderator of this webinar on the topic of introduction and application of technical analysis in stock market investing, as well as trading in equity markets, being organized by the Committee on Financial Markets and Investors Protection of our mother body, ICAI, would like to extend our thankfulness to the viewers who invested their valuable time to learn the nuances of the financial market. I would also like to extend our thankfulness to the most important persons of this sessions, that is our speaker. The first one being CA Prakash Padalia sir. The second one being CA Nikhilesh Soman sir, who are the gems of this webinar. The speakers have made it possible. Their hard earned knowledge acquired through rigorous application of many years have been shared by us in very few hours. Last but the most important, I would also extend our thankfulness to the technical team and the committee who worked tirelessly to make this webinar a successful section of interaction. Thank you so much, sir. Thank you to both the speakers as well as the technical session and the committee members to make this webinar the successful event.